great God of all nations, for the efforts that have culminated in this great roadmap we're about to launch today. As we deliberate, we ask for your wisdom and for your presence to dwell with us. We also ask that you look upon those who have lost their lives and their livelihoods to these floods. Look upon them with mercy, Lord, and grant unto them thy peace and comfort. Additionally, Lord, make available to them every resource necessary to bring them back to normalcy. We ask that you help us all to create that sustainable future that we desire, one that meets this present need and doesn't squander the opportunities of future generations. We ask all these through Christ our Lord with thanksgiving. Amen. I think the Bank of Ghana can give an offering. We'll do that on Sunday. What a way to begin the week. Floods everywhere. But it just tells us one thing. The future is in sustainability, meeting today's present needs without squandering the resources and opportunities for future generations. And so it's in that spirit we meet here for the Ghana Sustainable Finance Roadmap, the official launch. This comes as a culmination of efforts that began somewhere around 2015 with the bank's position on sustainable banking and the importance of aligning with global green finance goals. Fast forward to 2019, ladies and gentlemen, the bank launched the Ghana Sustainable Banking Practice Principles with the objective of promoting environmental stewardship among regulated financial institutions in Ghana. 7 years on, regulators and development partners have worked closely to strengthen the framework and ensure compliance across the financial sector. And today, Ghana has steadily risen to become a regional leader in ESG regulation in West Africa. I believe a hand is in order. But all this has happened because of collaboration, which is why today I'm excited that after 12 long months of steering committee work and stakeholder engagement, we present the launch of this Sustainable Finance Roadmap. My name is Jerry Ajololo, and on behalf of the Climate and Sustainability Office of the Bank of Ghana, together with our partners, the National Pensions Regulatory Authority, the National Insurance Commission, with support from the International Finance Corporation, I say good morning to you all and thank you for attending to our invitation as we launch this timely and critical roadmap. Today, we dwell on a theme: achieving regulatory convergence on ESG, promoting a resilient and sustainable future for Ghana. It is our hope as the Bank of Ghana, together with our partners, that this financial plan will help mitigate risks while enhancing Ghana's attractiveness to green investment flows, thereby supporting sustainable infrastructure development, and also to ensure that we have a coordinated and harmonized approach to financial sustainability, recognizing that climate and sustainable challenges extend beyond individual sectors. With this said, I'd like to acknowledge key stakeholders who have come to support our cause today. The Minister of Finance is represented here by his technical advisor. Would you please make welcome Mr. Frederick Emisa. Thank you very much for joining us. We're also joined by the Minister of State in charge of Climate and Sustainability, the Honorable Seydou Isifou. Thank you. We make welcome our gracious host, the Governor of the Bank of Ghana, Dr. Johnson Panditi-Siama. We make welcome the Second Deputy Governor, Mrs. Matilda Asante-Asiedu. In a show of solidarity, we're joined by the Deputy Governor of the Central Bank of the Gambia, Dr. Abdoulaye Sire Jallo. Thank you. We also make welcome the Acting UN Resident Coordinator to Ghana, Dr. Fiona Braka. Help me welcome from WAMA, the West Africa Monetary Agency, Dr. Boima S. Kamara. She's the IFC Division Director for West Africa and the Gulf of Guinea, Madame Nathalie Kwasi Akon. Thank you. We also make welcome, ladies and gentlemen, the team from the IFC SBFN. Please make them welcome with a round of applause. The Deputy Head of Mission and Cooperation at the Embassy of Switzerland, Madame Janine Wells, joins us. The CEO of the AGI, Mr. Seth Chum Akwabwa. Let's receive him warmly. From the Ghana Association of Banks, the President, the CEO, Mr. John Ewa. Deputy Commissioner of Insurance at the NIC, Bernard Ohimingba, represents the Commissioner. We make welcome, ladies and gentlemen, the Director General of the Securities and Exchange Commission, the Honorable James Kluche Aveji. The National Pensions Regulatory Authority is here represented by the CEO, Dr. Chris Bwedi Mensah. The CEO of the Chartered Institute of Bankers, Mr. Robert Jato, also joins us. Together with directors and officials from the Bank of Ghana and allied institutions, our friends from the Chartered Institute of Bankers, Institute of Chartered Accountants, the Ministry of Finance, and members of the press, we say accept the warm and generous recognition of the Bank of Ghana and her partners. Today's event is in two parts. The first is the official launch ceremony, which will be characterized by a few speeches and the official unveil or the launch of this roadmap. It will be followed by a panel discussion, and thereafter we shall break for lunch. When we do come back, we shall move into the technical session, which will have a few panel discussion, and we shall also end the day, ladies and gentlemen, by having closing remarks from the second Deputy Governor of the Bank of Ghana. Thereafter, we have a time of networking and bonding as one big family who have achieved this collective success for Ghana. To officially give us an idea of what has gone into this masterpiece, I ask that you please lend your attention to the screen as we showcase to you, ladies and gentlemen, the Sustainable Finance Roadmap. Enjoy.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities and directing capital towards investments that generate long-term value for both humans and the planet. Ghana's Sustainable Finance Roadmap provides a practical and forward-looking framework to guide this transformation. It charts a pathway for mobilizing green and sustainable finance, strengthening the management of climate-related financial risks, and embedding environmental, social, and governance principles across our financial institutions and markets. More importantly, it reflects Ghana's commitment to ensuring that our financial system remains responsive to the needs of today's generation while safeguarding the prosperity of generations yet to come. The development of this roadmap has been made possible through collaboration and a shared sense of purpose. I commend our fellow regulators, i.e. the National Insurance Commission, the National Pensions Regulatory Authority, and the Securities and Exchange Commission for their partnership and leadership throughout this process. I also extend my deepest appreciation to our development partners, particularly the International Finance Corporation, the Sustainable Banking and Finance Network, and the Swiss State Secretariat for Economic Affairs, whose contributions and unwavering commitment have been instrumental in bringing this roadmap to fruition. I wish to particularly acknowledge the International Finance Corporation for its valuable support during both the development and launch phases of this initiative. I also thank the Ministry of Finance for its oversight and guidance in ensuring alignment with Ghana's national climate and development priorities. My appreciation further goes to the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers, Ghana, for their invaluable contributions as well. To the investment community and private sector, I want to reaffirm that Ghana remains committed to fostering an enabling environment for sustainable investment and responsible business growth. We recognize that a transition to a sustainable economy will require innovation, to require partnership, and it will require long-term commitment. And we stand ready to support that journey. As we launch this roadmap today, let us see it not as the end of a process, but as the beginning of a new chapter, one that calls for collective action, bold thinking, and unwavering dedication. Together, we can build a financial system that is not only strong and inclusive, but also sustainable, resilient, and capable of supporting Ghana's development aspirations for decades to come. Thank you, and I wish us all a successful and impactful event.
Partnership, let us receive the IFC, and here to speak to us is the Division Director for West Africa and the Gulf of Guinea. Make welcome Madame Nathalie Kwasi Akon.
Good morning to all. It's good to see such a room that is full despite the rain and the heavy rain in Accra. The Governor of the Bank of Ghana, Dr. Johnson Pandit Asiama, the Minister of State for Climate, the representative of the Security and Exchange Commission, the representative of the National Insurance Commission, representative of the National Pension Regulatory Authority, representative of the Institute of Chartered Accountants, representative of the Chartered Institute of Bankers, representative of SECO, regulators, industry association, development partners, representative of the media, ladies and gentlemen, good morning and welcome. I promise to keep my remark brief, although when bankers and sustainability experts gather in the room, brief can be sometimes the first risk we need to manage. I am honored to join you in celebrating the launch of the Bank of Ghana Sustainable Finance Roadmap. On behalf of the International Finance Corporation, I want to extend my warmest congratulations to the Bank of Ghana, the Roadmap Committee, and all the stakeholders who have brought this visionary framework to life. Developing a national sustainable finance roadmap is not small. It's not a small undertaking. It requires vision, it requires coordination, and a strong commitment to aligning financial system with long-term development. Today's launch is a clear demonstration of that commitment. And the Bank of Ghana leadership and IFC and SECO are really proud to have supported the Bank of Ghana in this journey. Around the world, climate change, environmental pressure, and evolving market expectations are reshaping investment decisions. Extreme weather and disrupted supply chain are making sustainability a core consideration for business resilience, competitiveness, and long-term prosperity. In this context, the financial sector has a critical role to play in enabling transition to a sustainable and inclusive economy by integrating environmental, social, and climate consideration into each financial decision and really making financial institutions a way to better manage risk, identify emerging opportunity, and channel capital toward responsible investment. This roadmap is more than a policy document. It is a strategic framework that will help guide the financial sector toward strengthening the management of climate and sustainable risk, while also unlocking new opportunities for finance Ghana development ambition, including the creation of quality jobs across the whole economy. The Sustainable Finance Roadmap establishes a coordinated approach across banking, capital market, insurance, and pension, and it creates a common framework for regulators, financial institutions, and market participants to advance sustainable finance in a consistent and practical manner. Crafting a framework of this magnitude requires strong collaboration. We commend the Bank of Ghana for its leadership as the lead governor and we highly value the dedication of the entire Roadmap Committee, including the Ministry of Finance, the Security and Exchange Commission, the National Insurance Commission, National Pension Regulatory Authority, the Institute of Chartered Accountants, and the Chartered Institute of Bankers. This cross-sectoral unity is exactly what is needed to build a resilient economy that encourages private investment that is economically sustainable and environmentally sustainable. IFC support to the development of the Sustainable Finance Roadmap is through our integrated environmental, social, and government advisory program in Ghana, working closely with the Bank of Ghana and other stakeholders. The ESG program, as we call it, is supported by our valued partner, the Swiss State Secretary of Economic Affairs, SECO. Thank you again for this partnership. As we look ahead, the full implementation of this roadmap will be the next frontier. It will require sustained capacity building, innovative financial product, and an unwavering commitment to transparency and accountability. Together, we can position Ghana as a regional leader in sustainable finance and a blueprint for inclusive, sustainable growth across Africa. Congratulations again to the Bank of Ghana and all partners on this landmark achievement. We wish you great success in the implementation and in the journey ahead. Thank you.
Many thanks to you, Madame Nathalie Kwasi Akon. You're the IFC Division Director for West Africa and the Gulf of Guinea. Thank you for those warm words of commendation. And now let's move to an organization whose mandate in Ghana has been to promote resilient economic growth, sustainable urban mobility, climate adaptation, and inclusive governance. Make welcome the Deputy Head of Mission and Cooperation at the Embassy of Switzerland, who speaks on behalf of SECO, Madame Janine Walls.
Honorable Minister, the Governor of the Bank of Ghana, distinguished representatives of the regulators, representatives of the IFC, development partners, ladies and gentlemen, please allow me to stand on existing protocols. Good morning, and thank you for the opportunity to share a few words on behalf of Switzerland. Today marks an important milestone for Ghana's financial sector. Switzerland, through the State Secretariat of Economic Affairs, SECO, is proud to have walked part of this journey with you. Sustainable economic development requires strong institutions, responsible private sector, environmental integrity, and partnership built on trust, complementarity, and shared purpose. This roadmap developed under the leadership of the Bank of Ghana with the Ministry of Finance, regulators, and industry associations represents exactly that. The launch is a critical step towards genuine coordination on sustainability across the sector. It positions Ghana as a leader in sustainable finance in the region. Ghana is an important partner for Switzerland, and supporting sustainable and inclusive economic growth, including through ESG and sustainability themes, has long been at the heart of our cooperation here. We are happy to have partnered with the IFC under the Integrated ESG Advisory Program, which has provided technical input and convening support to the Bank of Ghana throughout the process. Climate resilience, responsible investment, inclusive finance, and sound governance cut across mandates. No single institution can advance them alone. As we move forward from design to implementation, continued capacity building, clear monitoring and reporting, and sustained stakeholder engagement will be essential. Switzerland remains committed to working with Ghana and other development partners towards a more resilient, inclusive, and sustainable economy. Our shared task now is to translate today's milestone into practical, focused follow-up action that add real value to the Ghanaians. We congratulate the Bank of Ghana, IFC, and all stakeholders on this achievement. The launch of this roadmap is not the destination. It is the starting point for unlocking sustainable finance at scale in Ghana. Thank you.
Many thanks to you, Seko, and the Deputy Head of Mission and Cooperation at the Embassy of Switzerland, Madame Janine Waltz. We shall now hear from the Minister of State in charge of Climate and Sustainability of the Republic. Would you please make welcome the Honorable Seydou Isifou.
Thank you very much, and good morning, distinguished ladies and gentlemen. Good morning, distinguished ladies and gentlemen. Thank you, thank you. The Governor of the Bank of Ghana, representatives of Ministers of State present here, Excellencies, heads and representatives of the National Insurance Commission, the Securities and Exchange Commission, and the National Pensions Regulatory Authority, chief executives present, managing directors, and leaders of our financial institutions, our development partners, investors, stakeholders, distinguished ladies and gentlemen. It is a distinct honor to join you at the launch of Ghana's Sustainable Finance Roadmap. I thank His Excellency, the Governor, and the Bank of Ghana for this invitation and for demonstrating leadership in positioning Ghana's financial sector at the forefront of the global sustainability agenda. And I want to congratulate the Governor for his leadership. It suggests to us in Ghana that there's a good synergy at the Bank of Ghana, and his leadership is delivering results. Thank you very much, Governor, for your leadership. I also commend the National Insurance Commission, the Securities and Exchange Commission, and the National Pensions Regulatory Authority for your collaboration in developing this Sustainable Finance Roadmap. This joint effort by all four regulators sets a strong foundation for the future of Ghana finance.
Honorable Minister, respectfully, let me just pause you for a minute. Ladies and gentlemen, what we're witnessing is just routine. It will pass in a minute, please.
mesures de sécurité, un incident nous oblige à fermer l'établissement. Merci de bien vouloir vous diriger dans le calme vers les sorties les plus proches. Your attention, please. For safety reasons, this building is now closed to the public. Please stay calm and leave by the nearest exit. Votre attention, s'il vous plaît. Par mesure de sécurité, un incident nous oblige à fermer l'établissement. Merci de bien vouloir vous diriger dans le calme vers les sorties les plus proches. Your attention, please. For safety reasons, this building is now closed to the public. Please stay.
Honorable Minister, thank you for your patience.
Thank you very much. This joint effort by all four regulators sets a strong foundation for the future of finance in Ghana. Even as we gather here, we remain mindful of recent climate shocks that reminds us of the agency of building resilience. It is therefore timely that we are focused today on solutions. Distinguished guests, the Sustainable Finance Roadmap we are launching today is more than a policy document. It is a declaration of intent. It affirms Ghana's financial sector is aligning with environmental, social, and governance principles, and with our national development and climate priorities. The logic is clear. Climate change represents a financial risk to our assets, to our investment, and livelihood. Sustainable finance provides the financial tools to manage that risk, unlock capital, and drive growth. By embedding environmental, social, and governance principles into lending, investment, insurance underwriting, and pensions fund allocation, we achieve three strategic outcomes. First, we strengthen the resilience of our financial system. We mobilize domestic and international capital for green and climate resilient projects. And finally, we position Ghana to attract investment in the industries of the future. Ladies and gentlemen, in line with these strategic outcomes, this roadmap opens real opportunities for Ghana. It enables our banks to develop green and sustainability-linked loan products. It enables our insurance sector to expand climate and parametric risk products. It enables our capital market to deepen green, social, and sustainability bonds. It enables our pensions funds to deploy long-term capital into resilient infrastructure, renewable energy, and climate adaptation. In short, it creates a pipeline of investable, bankable projects that aligns profit with purpose and returns with resilience. Distinguished ladies and gentlemen, let this roadmap be the bridge between policy and practice. To our financial institutions, I'd encourage you to move with urgency. Integrate environmental, social, and governance principles into our strategies, your risk models, and your product offerings. Train your teams, disclose your climate exposures, and finance Ghana's transition. To our investors and development partners, Ghana offers a stable, reform-minded environment for sustainable investment. This roadmap provides clarity and standards you have been asking for. Partner with us. To our regulators, thank you for your vision. Please continue to provide the regulatory certainty, supervisory framework, and data infrastructure that will make sustainable finance mainstream across banking, insurance, capital market, and our pensions. Ladies and gentlemen, As my office is mandated to coordinate Ghana's climate and sustainability agenda, we reaffirm our commitment to working closely with the Bank of Ghana and all financial sector regulators to strengthen policy coordination, facilitate access to international climate finance, and ensure that Ghana's climate commitments are matched by sustainable investment and effective implementation. Our shared objective is to ensure that capital flows to where it is needed most, to resilient cities, to green industries, and to a stronger, more diversified economy. Distinguished ladies and gentlemen, today's launch marks the beginning of a new chapter for Ghana's financial sector, one that is innovative, responsible, and future-ready. I congratulate the Bank of Ghana, the National Insurance Commission, the Securities and Exchange Commission, and the National Pension Regulatory Authority on this achievement. Together, let us finance a greener, more resilient, and more prosperous Ghana. I thank you very much, and God bless you. Congratulations to all of you.
And his is a labor of love to mainstream climate change, mobilize an estimated $22.6 billion for climate needs and coordinating sustainability initiatives across 22 ministries. Please help me appreciate Ghana's Minister in charge of Climate and Sustainability, the Honorable Seydou Issoufou. Thank you for those warm remarks and for commending this roadmap as that bridge between policy and practice. Ladies and gentlemen, while I seek a sustainable end to this noise which keeps buzzing in the background, allow me to give to you the Bloku Dance Ghana. They are from the Arts Center, Accra, and they are here to show us the power of theater in achieving sustainability. A round of applause for them.
Every choice moves, every risk spreads. What touches one touches all. Before we invest, we must see beyond profit, beyond today. Responsibility builds trust. The earth is speaking. Flood, heat, storm. Change is here. Resilience begins together. This is the thunder. Capital can build energy, food, homes, opportunity. When purpose leads, futures grow. Different hands, one vision. Shared responsibility, shared progress. Responsible choices, resilient systems. Sustainable investments, inclusive growth. Together, we shape tomorrow.
One more time, let's appreciate Local Dance GH, Knee Cultural Group from the Arts Center. And so this sets the proper context for us to hear from our host, the Governor of the Bank of Ghana. Would you please make welcome Dr. Johnson Pandit Esiama.
Hello. You know, I like my mornings to be very warm. So when I say good morning, let me get it back. Good morning. Thank you very much. So I'm standing on existing protocol. I acknowledge the Honorable Minister. We also have the representative of the Honorable Minister of Finance who couldn't join us. We have fellow regulators from within Ghana, Ghana's financial sector, SEC, MPRA, and the others with us. We also have some governors, visiting governors, especially from the Gambia. We have DG Wama joining us here as well. And then, of course, our partners from the IFC, SECO, Sustainable Banking and Finance Network. It's good to see you all this morning. So it's my pleasure to welcome such a distinguished audience to today's event. Your presence today highlights our shared commitment to advancing sustainable finance in Ghana and ultimately contributing to global progress in this emerging field. Today marks a truly momentous occasion for Ghana's financial sector as we take a decisive step towards a more resilient and sustainable future for our nation, Ghana. So I want to begin with the idea that runs through everything that I'm going to say this morning. And that is that sustainable finance is increasingly central to financial stability, to long-term investment, and to economic resilience. It is reshaping where global capital flows and what investors expect of our financial systems. A changing climate is one reason this work has become urgent, so urgent. But it's not the whole of it. Sustainable finance is also how we coordinate our regulation work and how we unlock new capital for Ghana's development. So I want to speak this morning about why sustainable finance matters for our financial system, what it asks of us as regulators, and the opportunity it opens for Ghana. So where we are, as Ghana strengthens its economic foundations, it is equally important that our financial system is equipped to support resilient and sustainable growth. Part of that resilience means reckoning with a new type of risk. A changing climate now bears directly on financial stability, just as the recent flooding across Ghana reminds us. Colleagues, such risks do not stay in the environment alone. They travel, and they do travel into the financial sector through the value of assets, the cost of claims, and the security of lending. The instruments and structures of the past that we used to have were not built for these, and meeting them asks us to recalibrate how we supervise going forward, how we price risk, and how we plan. Indeed, while we cannot predict the future with certainty, we can shape it through the choices we make today. That future will only become a reality if we are intentional in creating it. It is now clear that climate change and other emerging sustainability challenges are no longer distant concerns. They are realities that increasingly shape our economies, our businesses, and our financial systems. Hence, responding to these challenges is not simply an option. It is a responsibility one that we owe to our nation and to generations yet to come. Now, what does this mean for regulation? In Ghana, financial stability is regulated across 4 sectors. First is banking, second is insurance, third is securities, and fourth is pensions, with each regulator overseeing a distant segment of the financial sector and guided by its respective regulatory authority. Together, these pillars form an interconnected system whose strength depends on coordination, on collaboration, and a shared sense of responsibility. But risks of this kind, they respect none of these boundaries of regulation. And a risk that moves across the whole system cannot be managed by any one institution sitting alone. Clearly, achieving a truly sustainable financial ecosystem goes beyond individual mandates. It calls for coordinated, long-term collaboration among all relevant regulators aligned around a shared goal. So to ensure that sustainable finance is fully embedded across Ghana's financial landscape, we must continue. We must continue to deepen our partnerships. We must align our strategies and act with purpose and consistency. So the Bank of Ghana's sustainability journey so far is taking a decade. And I remember so well 10 years ago when we embarked on this journey. So we mark about a decade today as we started this work deliberately. In 2015, the Bank of Ghana convened a multi-stakeholder committee that was later formalized as the Sustainable Banking Principles Steering Committee, bringing together the bank, the Ghana Association of Banks, and the Environmental Protection Agency. Later in 2019, that work produced the Sustainable Banking Principles and their sector guidance notes designed to manage environmental and social risks, promote green and sustainable investment, and align financial intermediation with Ghana's broader development objectives. All 23 chief executives of our commercial banks, they voluntarily endorsed these, collectively pledging to integrate sustainability considerations into their governance structures, risk management processes, and overall business operations. This unified commitment marked a turning point, signaling the readiness of Ghana's banking sector to embrace sustainability not as an obligation, but as a strategic imperative. Then in 2021, with the support of the IFC and SECO, we built a standardized framework to measure compliance, and that compliance has risen steadily, reaching an industry average of 73% as at September 2025. Then in 2024, we published a comprehensive 4-year strategic plan on sustainability and climate-related risks, covering the period from 2024 to 2028. And we designed to consolidate, deepen, and scale up our ongoing efforts. We issued the Climate-Related Financial Risk Directive, which strengthens the capacity of regulated financial institutions to identify, access, and manage climate-related financial risks and integrate these considerations into our supervisory and regulatory frameworks. And that is what this roadmap is for today. It takes work that has until now lived in different places and under different mandates and for the first time, provides a common framework through which Ghana's financial regulators can approach sustainable finance in a coordinated way. It is anchored on three core pillars. The first is on environmental, social, and governance integration. The second one is on climate-related risk management. And the third is on financing sustainability. Colleagues, these pillars reflect our shared vision of embedding sustainability at the heart of financial sector operations and decision-making. Under each, we have set out practical steps for the respective regulators to take, so that what we describe this morning is not an aspiration, but a sequence of actions with owners attached to them. These actions will strengthen our collective ability to anticipate emerging risks, respond proactively, and unlock new opportunities that support inclusive and sustainable economic growth. And through this framework, we aim not only to strengthen the capacity of the financial sector to manage emerging risks, but also to unlock opportunities that drive long-term value creation for the economy. Financing sustainability is about mobilizing private and institutional capital, developing green and blended finance, and positioning Ghana as a regional hub for sustainable finance. But the roadmap, of course, is only as good as its implementation. The launch is an important milestone, as we are doing this morning, but its implementation is where its true value will be realized. So what does success look like going forward? Colleagues, sustainable finance is not only about managing risk, as I've said, it is also about positioning Ghana to access new pools of global fund capital, to finance critical infrastructure, to support the energy transition, to deepen our financial markets, and to strengthen long-term growth. Our purpose as regulators, therefore, has always been the safety and soundness of the financial system. But soundness in this era means more than absorbing today's shocks. It means positioning Ghana's financial sector as a leading destination for sustainable finance, attracting the domestic and international capital that a sustainable transition requires. Capital that is increasingly looking for precisely the frameworks we are putting in place. If done well, this is not a cost we have to carry. It is a market. It is a market that we open in doing so. Talking about deeper access to climate and development finance, a more resilient banking system, and a credible claim to leadership in sustainable finance across our region. In this way, we do not merely regulate for stability. We actively shape a financial ecosystem that positions Ghana to fully leverage emerging opportunities within the global sustainable finance landscape. So let me acknowledge a few of our partners that have supported us. To the members of the Sustainable Finance Roadmap Committee, they are drawn from the Ministry of Finance, of course, the Bank of Ghana, the National Insurance Commission is part, the National Pensions Regulatory Authority is part as well. Then, of course, the Securities and Exchange Commission. We have the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers. To all of you, this roadmap is your achievement. And the coordination it represents is exactly the discipline it now asks all of us to sustain. And to the International Finance Corporation, SECO, and the Sustainable Banking and Finance Network, your expertise and partnership have shaped this work from the beginning. and we value it greatly. The roadmap we launched today is an important milestone indeed, but its success will be measured by what we do next with it. Let us therefore carry it forward together with the same spirit of partnership that brought us here and build a financial system that is more resilient, that is more competitive, and better prepared for the future. Thank you for your attention.
Help me say thank you once more to the Governor of the Bank of Ghana, Dr. Johnson Pandit Isiama. You have articulated to us all too well why sustainable finance matters for us in the banking and allied industry, and where we are and the opportunities available to us. And so it has come to that moment where we hear from the Minister for Finance, who is here represented by his advisor. Would you please make welcome the technical advisor to the Minister, Mr. Frederick Emisa, for the keynote.
Good morning. To a very Ghanaian thing, I would say all protocols observed. Today, I see my friend here, the Commissioner of Insurance, and yesterday I was thinking about him. When I saw the cars which were being washed away, the various buildings, I knew his phone was blasting. And I know he will rise to the task of ensuring that the very purpose of insurance is realized as a result of what we experienced yesterday. I bring you greetings from the Minister for Finance, Honorable Kesel Atoba-Forson, and it's unfortunate he wasn't here today. Yesterday's incident again prevented him from coming today. And on behalf of him, I stand here to join you as we launch this sustainable finance roadmap. Today, we gather not to launch a document, but to unveil a financial architecture for a changing world. Across the globe, the climate change is rewriting the rules of development. It is changing how we produce food, how we build infrastructure, how we insure assets, how we manage public finances, and how investors price risk. For a country such as Ghana, climate sustainability is a macroeconomic issue, a financial stability issue, a competitiveness issue, and above all, a national development issue. When floods wash away roads, the cost appears in the budget. When droughts affect crop yields, the cost appears in food inflation and headline inflation. When coastal erosion threatens communities, the cost appears in public investment plans. At this moment, and with your kind permission, may we observe a moment's silence for the 9 lives which were lost yesterday by the floods. It's unfortunate, but 9 lives were lost yesterday. May the souls of the departed find rest. Sustainable financing has an important role to play as we seek solutions to these and other climatic and environmental challenges we are faced with. Today, Ghana is saying with a loud voice that the finance architecture must support the future resilience of this country. We are saying that capital must not only seek return, it must build resilience. We are saying that the financial sector must become an engine not only for capital formation, but for climate transformation. Ladies and gentlemen, today's roadmap stands as a testament to the strong institutional collaboration between the Bank of Ghana, the SEC, NPRA, and the NIC. This effective collaboration reflects deliberate and strategic move towards regulatory convergence, and ensuring that all segments of our financial risk system speak the same language when it comes to ESG standards and sustainable finance. Governments also extend our gratitude to the IFC, who have provided a valuable support in developing this roadmap. Ghana is not starting from zero with regards to sustainable finance. We have already taken steps in ensuring that our financial system and our macroeconomic system is resilient and helps us in achieving our financial sustainability goals. The Bank of Ghana issued the Sustainable Banking Principles and Guidance Note some time ago. The Ministry of Finance, we have also developed the Green Finance Taxonomy, which ensures that, or which gives an update or a list of things which are permissible or things which are sustainable, or financing activities which are sustainable and those which are not. This financing, sustainable finance program must not be an end in itself. We are saying that based on the effort, the governor said that it's been 10 years in the making. This must be a call to action. Today should be a gathering of actionable members of society. I mean, I'm very emotional because yesterday the president called, and as usual, the finance ministry were asked to come up with something. And you could see the impact of various decisions that we make. When banks are lending, we ask ourselves, do they take into consideration sustainable finance clauses where banks are lending to construction companies? Yesterday, many of the construction sites we saw were flooded. So we ask ourselves, these were funded by banks. What did we do as financial institutions to ensure that the very site on which the building was sited was not in a waterway? That's our job. And with just reviewing the credit papers and putting some metrics in a software to ensure that this client is worthy of credit, or we go the extra mile to ensure that so be it, where our monies are being taken is in support of the environment. The government brought the gold board, and what the gold board brought was that it sought to formalize, or it sought to put small-scale miners in sort of those who are in good standing and those who are not. Banks are finding small-scale mines. The gold board has a list of small-scale miners in good standing. Are we going by that? Are we lending to small-scale miners who are not depleting our environment? Or are we just sticking by some metrics and ensuring that we meet our profitability and loan targets? I would like to say that as Finance Ministry, we want to take this opportunity to reaffirm our unwavering commitment to creating a policy environment for sustainable finance. We will continue to strengthen macroeconomic stability, support regulatory reforms, promote fiscal policy that encourage green and inclusive investment, and collaborate with international partners to mobilize resources for climate and sustainable activities. Here we call the blended finance. Let us seize this opportunity to transform our financial system into a powerful engine for sustainable development, one that safeguards the environment, promotes social inclusion, and delivers enduring prosperity for all Ghanaians. On behalf of government, I would like to congratulate the Bank of Ghana and its partners for this roadmap, and also to say that the Minister of Finance stands ready to support the implementation of this roadmap. Thank you.
Thank you very much, Mr. Frederick Emisa. Respectfully, I would like you to stay on with me as I invite to join you, please, in the middle. As I invite to join you, the Governor of the Bank of Ghana, please make welcome. Together with the Deputy Governor of the Central Bank of the Gambia, a round of applause as they come up. It is my pleasure to invite also from SEC, the Director General, make welcome the Deputy Commissioner of the NIC, make welcome the CEO of the MPRA. Would you please make welcome the IFC, together with SECO, and the Minister for Sustainability and Climate of the Republic. And so, ladies and gentlemen, the time has come for us to officially view the official unveil of the Ghana Sustainable Finance Roadmap. Can we have the countdown? Oh, certainly remiss of me. Please, one more, please. The Deputy Governor, please, a round of applause as she joins us, please. And now the moment has come, the countdown. And to the glory of God, it is finally here. Put your hands together for the Ghana Sustainable Finance Roadmap. And this is how we strengthen the framework and ensure compliance across the financial sector, promoting ESG. Ladies and gentlemen, put your hands together one more time. And so it falls to you. And on 3, you are going to lift it and officially outdoor it to us. Governor and your team, are we ready? So in 3, 2, 1, ladies and gentlemen, behold the Ghana Sustainable Finance Roadmap with 3 happy cheers. Hip hip, hip hip, and hip hip. Thank you very much. Official party, please stay with me as I invite for a few photos the following persons. Can we please move to the base? My pleasure to invite to join the party the heads of various institutions herein gathered. Heads of various institutions herein gathered, a representative each. Please join us on stage. Photographers, are we good? Thank you, heads of institutions. Let me now invite heads of departments of the Bank of Ghana. Heads of departments of the Bank of Ghana. Heads of departments of the Bank of Ghana, or the representatives, and representatives. Thank you, heads of department. Members of the diplomatic corps, please. Members of the diplomatic community. If you're not here, we'll be joined by the steering committee. Let's receive the steering committee. All members of the steering committee, would you please join us? Right, thank you very much. Ladies and gentlemen, let's applaud the team. IFC and SECO team, it is requested that you have your exclusive. The IFC and SECO team. IFC, SECO, and SPFN. Thank you very much, our governor and the official party. Ladies and gentlemen, please, a round of applause for them. All is set now for a very important conversation on the role of central banks and other state agencies in creating an enabling environment to unlock green capital for sustainable development. Mr. DJ, bring the music down. Show by hand if you're from the banking industry. Oh, bankers, you are disowning your own. Insurance. Oh, you're not part of us anymore. Hey, I hear you. Let's talk of pensions. Okay. Let's talk of securities. Okay. Let's talk of development partners. Media. Okay. So at least we have broad stakeholders in this room. For the next few minutes, I just want to go around and elicit some views. A lot of things have been said. As we're going to have this conversation on the role of central banks, what are your expectations? What have you heard that you think can be amplified? What haven't you heard that you think should be factored in? Let me start with you, madam. Madam? Share with us, what have you heard so far that you think we need to amplify? What haven't you heard that you think we need to bring into the conversation?
I believe we need owners of these actions so that we can put practicality to them. Thank you.
Let me move to this side. I see the Chartered Institute of Bankers here. The president, no, the CEO, Mr. Robert Jatu. What are your thoughts so far?
Well, so far, so good. I believe positioning Ghana as the sustainable finance hub in West Africa and across Africa, it is really an important milestone. But here's where the real work begins. And so the hard work starts now.
Okay, all right. It's important we hear from Wama.
Thank you. I think in the context of a sustainable finance architecture, significant attention to also emphasize the domestic resource mobilization structure that anchors on system, and the system that will be to deliver on, allowing for finance from the domestic space to be capitalized.
Thank you very much, Wama. Let me take a few more. Hello, sir.
Thank you very much. I like the fact that all of the key stakeholders are involved in the process of developing the roadmap. I would just like to go one step ahead by inviting those who are the users of these different products from the banks, the insurance, to also be part of it. Thank you.
Dr. Chris Boydie, I'm eager to hear your thoughts. That's how the rapture works here, you see.
Jerry, thank you so much. Thank you. I think we are grateful to the council members of financial. We are grateful to the council members and the steering committee for the good job, and we believe that the players in the industry as well will consider ESG as very important thing that we need to look at as a nation. Thank you.
Very much. Let me move to the back. I sample a few more, and then shortly we shall begin the conversation. Ma'am, can I have your thoughts, please?
Thank you so much. This is Shaima Hussein from UNDP. What comes to thought when I saw the roadmap, actually the keywords that were presented by the governor, especially about the implementation. The roadmap is just a start, and this is where the development partners come into play to support with efficiencies. Just to flag, UNDP was working with the Ministry of Finance on parametric insurance. So that's something that is very relevant to take it forward. Thank you.
Thank you. A round of applause for the UNDP. Thank you very much. Let me take two more. Madam, I see you busily typing. Could you share with us your thoughts?
Okay, so far so good. I'm looking at effective implementation of the roadmap. That's all. Yeah. Yeah.
Okay. Yes, please.
Okay. Thank you very much. It's been exciting seeing the presentations as well as also the speech by the governor. What is critically important is how to mobilize capital to implement green investment in Ghana as well as Africa as a whole. Thank you.
All right. And so with all said, ladies and gentlemen, we move straight into that important conversation, the role of central banks and other state agencies in creating an enabling environment to unlock green capital for sustainable development. Please welcome our moderator, Mr. Musa Salah of the AFDB, Senior Environmental and Social Safeguards and Compliance Officer. A round of applause as he takes his seat. He's joined in conversation by the technical advisor to the Minister for Finance. Make welcome Mr. Frederick Emisa. We make welcome the Deputy Governor of the Central Bank of the Gambia, Dr. Abdoulaye Sere Jallo. And representing the Governor of the Bank of Ghana, the Head of Banking Supervision at the Bank of Ghana. Oh, please, the Governor himself joins us. Ladies and gentlemen, Dr. Johnson Pandit Isiama. And I'm told you've been an integral part of this journey. You've been part of this whole roadmap. Ladies and gentlemen, a round of applause for Mr. Salah as he moderates this conversation. Over to you, sir.
Thank you very much. There's supposed to be 4 panel or the 3? Okay. No? Okay. You know what? Pardon me if I'm a bit nervous. I'm highly elated about this whole event. Elated because we started this journey in 2013. Wow. And I'm so happy where we've reached today. We started with Mr. D.K. Mensah, who happened to be, late Mr. D.K. Mensah, who happened to be an executive director of Ghana Association of Bankers. We started from a small room at the pension house where GAP used to have its secretariat before they moved. Then today, the rest is history. On that note, good morning. Distinguished governors, honorable ministers, excellencies, distinguished ladies and gentlemen. As I said earlier on, it is a privilege to welcome you to this important conversation on the role of the central banks in creating an enabling environment to unlock green capital for sustainable development. As I reflected on today's discussion, as rightly mentioned in the Mr. Governor's speech, my mind went back to 2015 when I had the privilege to chair Ghana Sustainable Banking Committee. At that time, we were working with the Bank of Ghana and the banking industry, as well as Environmental Protection Agency, to develop what eventually became the Sustainable Banking Principle, which Mr. Governor alluded to in his speech. I remember that one of the recurring questions around the table was remarkably simple. Why should a central bank be concerned itself with sustainability? Some view sustainability as an environmental issue. Sorry, I understand the representative of Ministry of Environment is not here today, but that was it. Others also saw it as corporate social responsibility. There was an understandably hesitation about whether it belonged to the remit of a financial regulator. Yet, as our discussion evolved at the time, something became increasingly clear. Climate risk were becoming financial risk. Environmental degradation was affecting asset quality. Social issues were also influencing credit performance. As a result, sustainability was no longer peripheral. It was becoming central to financial stability. That experience today that has taught me an enduring lesson. Central banks do not have to finance every green project, but they have the unique ability to shape the confidence, the incentives, and the regulatory environment that determine whether green capital flows. More than a decade today, that question has evolved. We are no longer debating whether central banks have a role. The challenge now is understanding how they can exercise that role in a way that preserves their core mandate while helping to mobilize the scale of investment required for sustainable development. Ladies and gentlemen, based on that, we are highly honored to be joined today by an exceptional panel of distinguished leaders whose collective expertise spans central bank, fiscal policy, environmental governance, and sustainable finance. Their leadership in helping to shape the policies and institutions that will determine how effectively we mobilize green capital for sustainable development. But rather than just telling you about them, they have a distinguished biography. I will briefly introduce each of our panelists before we begin the conversation. Starting with our distinguished governor of Bank of Ghana, Dr. John Siama, and then also followed by the representative of the Bank of the Gambia? Okay, our deputy governor of the Central Bank of Gambia, thank you, and also representative of Minister of Finance. Pardon me, okay, my apology. So these are the panel that are going to be giving us their insight as we chat along this conversation this morning. The panelists, you're welcome. Audience, your panelists.
Thank you.
I'll now take my seat. Okay, you're welcome. I wish we had had a lady on the panel so as at least it could be gender inclusive.
It's not late at all. We can still add.
You know, in that case, we'll be able to make it more gender inclusive, which will also help us in charting forward our sustainability stewardship. Nonetheless, we'll do with what we have, and we'll make sure we get what we need to do. So, for many years now, as I also gathered from your conversation and the speech that you delivered, well articulated, central banks were viewed primarily as guardians of monetary and financial stability. Today, climate change, biodiversity loss, and other sustainability challenges are increasingly recognized as sources of systemic financial risk. Now, my question to the governor. I would like to start with you. Over the last decade, we have screened central banks move from being observers of sustainability discussion to becoming active participants. So from your perspective, what has driven this shift? And what do you see as central bank's most important role in unlocking green capital while preserving its core mandates?
Well, thank you very much, Musa. And it's exciting to see you again. By the way, we were doing this together many years ago. So happy to see Musa again. Musa, you know, yesterday I was away. I was in London when I was told there was flooding happening in Accra, in Ghana. I was shown all kinds of videos. And then I said, wow, and we are launching the sustainability roadmap, you know. It couldn't be more appropriate. And then yesterday, early morning, I had a call from the Association of Banks. And he says, what can banks do? The banks are saying the whole place is flooded. They want to kick in their, how do you call it, business continuity plans. Can we get your approval? And I said, wow, this thing is real. You know, climate risk is real. These are not marginal issues at all. Then later in the afternoon, I got information again. I think when His Excellency the President mentioned he had spoken to the Minister of Finance to look for some money. Then I said, well, there we go, fiscal risk as well kicking in. Because all that money, the minister is in Parliament right now, I believe. All that money he's going to make use of is probably not provided for in the contingency. So straight away, there's a fiscal impact as well, just because of what? Flooding. And then I was in Switzerland some 4 days ago, and the whole place so warm, heat wave all over the place. So we said, what could be causing this? And they said, global warming. I mean, temperatures have gone to excessive levels that have never happened before. And I said, wow, that is climate risk for you. So for me, looking back over the years, I started central banking over 30 years ago. Some of these things were not issues at the time. Governors at the time never had to bother about the climate impact of, you know, the loans that banks make, etc. But right now, it's become mainstream, whether we like it or not. The monies that banks give to people, the projects they finance, if you don't pay attention to the impact, the environmental impact of those projects, what will happen is exactly what we are seeing now. Fiscal risk, risks to all other sectors of the economy. It can actually become a macroeconomic shock. If the flooding should continue for a week, this could actually become another macroeconomic shock that we never envisaged. So in sum, Musa, this subject, what we are discussing this morning is nothing peripheral. This is core. This is very, very important. And at the Bank of Ghana, we are happy to be associated with it. Thank you.
Thank you very much. Thank you very much. I think, still, since you're also from the regulator, I would like to hear your perspective on the same question, sir.
Okay. Thank you very much. I think what we can draw from governor's statement is that the central banking is no longer the orthodoxy that we had before on price stability. Now we know for us to maintain the price stability, and for some of our small economies like the Gambia, where we also add exchange rate stability because we are small open economies, you really have to go across the whole spectrum of the development space. to do that. So the flooding that we've just been mentioned here, we were expecting it to have some impact on the fiscal space. And then who's going to step in? It's the central bank will need to step in and also support the ministry as they are addressing these challenges as well. But in addition to that, I think the more you look at the problems of climate change, the more you realize how it is necessary to really look inwards for financing, for capital, to really address them. And my take is that it's not really the challenge for us is not really the absence of capital. It is really but the creation of the right conditions for that capital to be directed towards green investments. I will start with that and leave you with that.
Thank you very much. So in a sense, yes, climate risk, sustainability risk, environmental risk is not just a matter of risk at all, but it's also a potential cause of potential concern for macroeconomic shock. At the same time, you're looking for funding to support investment in this area should not only be looking at outward, but at the same time, we should also look inward. Thank you very much. Yeah, the representative of the Honorable Minister, you've heard from the regulators. So from the government, what do we need to put in place in terms of the policy dimension to unlock investment in green financing or green capital?
In effect, you are asking for fiscal monetary coordination in regards to sustainable finance. And what basically we at fiscal authorities we have to ensure is that macroeconomic stability. Macroeconomic stability is the bedrock of the financial system. If we don't have macro stability, the financial system has no legs or it has no leg to stand on. What it is that if fiscal authorities and monetary authorities don't coordinate carefully, you will see that even the very budgeting process of government would derail the very efforts of the monetary authority. So the first point we have to ensure is that there is close coordination between the fiscal and the monetary authorities. The other thing is that, you see, macro stability gives direction to how financial resources flow. Those times that we have treasury bill rates almost 30%, the banks will pick the money from depositors and just bring it to government. But now that T-bills are 4 and 5 and 6, we see more of the banks lending to the real sector. Okay. If they are lending to the real sector, what do we do as fiscal and monetary authorities to ensure that that lending is done in a sustainable manner? And that is what I mentioned earlier, that if there are sustainable clauses in our loan agreements, it will ensure that banks will no longer just be lending to clients, but they will ensure that this warehouse I am financing, is it in a waterway? Even though the assembly has provided permits for it, do we just go beyond inspection of documents to ensure that indeed it's not in a waterway? This gold mining company we are lending to, are they properly regulated? Are they ensuring traceability? Are they ensuring that they are not mining in forest reserves? So banking and finance has close relationship with macro and the stability that the micro ensures. And also, at the ministry, we are trying to fast-track the rollout of the National Sustainable Finance Strategy, which will ensure that there is some sort of coordination at the national level. I'm sure the Minister of State for the Environment or Climate Affairs will play a key role in ensuring that we come out with a document that responds to the needs of our time. Thank you.
Thank you so much, Mr. Frederick. So in a sense, it means that you're trying to ensure that the lending environment is not only looking at environment and sustainability from the risk perspective, but it should actually move towards maturity that will reflect sustainability, that will also create a competitive advantage when it comes in the terms of lending. That's excellent. Thank you. Mr. Governor, I'd like to follow up with a couple of other questions with you, sir. So now, be what it is. What is, sorry, I'm trying to see the question again. Okay, what structural barriers prevent green capital from flowing into African market. You've talked to us about the Ghana context. Right now, let's look at it beyond Ghana, West Africa, and the Africa as a whole, in terms of the barrier preventing the flow of green capital to the continent.
So first of all, there is the general barriers, that impact on capital flows into our sub-region. That's also part. Talking about the shallow markets that we have, etc. That also impacts on green finance. But aside that, the availability of bankable, projects in that area, climate-related areas where projects are bankable, the availability of those is also one thing we have to consider. And as a matter of fact, the lack of development of the entire framework, right, to encourage green finance, that has also impacted. Now, what we are doing today seeks to address some of those, deficiencies. Now there's an elaborate plan. We have issued a risk directive to banks. We call it the Climate-Related Financial Risk Directive. These set up in a formal way the framework within which green financing should be deployed. So now that we are setting up the frameworks, we expect the availability of such capital flows, to increase. And aside that, we are collaborating with a number of partners, development finance institutions and the likes, the World Bank, you name it. So going forward, we expect to see an increase in the availability of such funding. But that said, we shouldn't look at the inflow of, such capital alone. Within our own environment, the rep from the Minister of Finance made mention of some of the things. Warehouses that are built in waterways. It makes sense, an economic sense to put up that warehouse. The payback period might be short, etc. But for all you know, it would lead to what happened yesterday after some years. If we can do some of those alone within our own constraints of domestic resource mobilization, I think we can do a bit. Even as the central bank and the Minister of Finance and others, lobby or take other measures, to enhance the inflow of capital into green financing. So I think there's a lot we can do on our own, even as capital flows into the system.
Excellent. Thank you very much. I think I'll put the same question to your counterpart from the sister country, Gambia. Dr. Jallo.
Thank you very much. I think one of the challenges is real access to capital. And I think like Governor has mentioned, let's not look only externally, let's look internally as well. Now, I just was going through some statistics for Ghana last night, and I noticed that the Ghana's remittances in 2025 amounted to $7.8 billion. Now, this is from 1.5 estimate to 4 million Ghanaians abroad. Now, if you just compare this on a remittance per diasporan, it's about $1,950. And then you just divide that further by month, it means each of those 1.5 to 4 million Ghanaians brought in $162 a month. And that breaks down to $5 a day. Now, yes, so $5 a day, and I think the exchange is almost 11 cedis, right, for $1. Like, yeah, like $55. 55 cedis is what they send a day. But we're talking about $7.8 billion. And just to put that in context, Ghana's debt stock, in February 2026, is $63.1 billion. So we can give you the context of that $7.8 billion related to the total debt stock of Ghana, being 63. So we're not, and when you break this down to $5 a day, it shows you that there is really a capacity to address investment projects in the country, sustainable investment projects. Yeah. And that, by the way, when you start counting that $5 to 55 naira, you realize it's not only diaspora who can afford it. there are lots of resident national Ghanaians who can afford that $55 a day. So meaning that there is a pool of a source of investment from both residents and diaspora Ghanaians to invest in sustainable agriculture, for instance, or in green investments, for instance. So in the Gambia, what we did is we call it the National Direct Investment Initiative. And we are trying to work with the National Growth Authority to build a bypass that would ease the traffic from Banjul to the urban area. And people ask, why is Central Bank doing this? We're doing this, why is Central Bank working with the Minister of Communications? Because our mandate is also exaggerate stability. And we have a challenge normally around the June, July, April, May, June, when the tourist season is off. So then our exchange rate becomes very volatile. But from November to December, when we have our diaspora and Gambians coming and tourism is on, the dollar is stable. So we saw that it was simple, the demand supply. Increased supply of the foreign exchange has enabled our dollar to be stable. So again, this remittance that we can encourage to come from this route can enable us to stabilize the exchange rate. So that become the reason why we saw the need to be there to work with them. Similarly, the central bank, Minister of Environment, Minister of Finance can see the need for the central bank to work with them in addressing sustainable agriculture, green investments, and through diaspora financing, as well as national financing as well.
Thank you very much, Dr. Jallo. So in a sense, there's an interministerial coordination in making sure that the capital flow into the green business is. Having said that too, you're also doing some internal measure in terms of creating enabling environment to make access to credit available, affordable, and accessible. It's not just about availability, accessibility and affordability is equally important. Thank you very much, Dr. Jallo. Mr. Frederick Isiama. Mr. Sorry, so my apology. My apology. I mean, Mr. Okay, my apology. So, from the policy, from the government side perspective now, access to finance is critical, but one of the measures that sustainable banking or sustainable finance is trying to achieve is how to create a blended financing to make investment in green capital easy and affordable and accessible. From your perspective, is there anything the government is doing to make this possible that you could also share with us, in addition to coordination that you told us about earlier on, sir?
Yes, I don't mind the Isiama at all.
Everybody wants to be a governor. Sorry, yes.
Yeah. First of all, for government or for the Ministry of Finance, what we look at a lot of the time when we talk about blended finance and all these things, we forget what we call the sovereign risk.
Yeah.
The sovereign risk is very important. What is the risk rating of the state of Ghana? So the first thing we have to do is to ensure that Ghana becomes attractive in general for capital. Because if we don't meet that first order condition, those other things will not follow. So what we are doing as government is to ensure that we maintain a sustainable debt, which will ensure that our risk rating or our sovereign ratings will improve, which will automatically make us attractive for investment or capital inflows. That said, government is also putting our money where our mouths are. You see, if we believe in sustainable finance, we should demonstrate that we are walking the talk. What we have done, or what we did in this year's budget, that's the 2026 budget, was that government is acquiring. One of the challenges of investment, one of the barriers of investment, of investing sustainably in Ghana is access to land. Government is actually acquiring over 100,000 hectares of land from palm cultivation. What the government is doing is that we are not talking to traditional leaders and owners of land to give it to private sectors. Government is using part of its IDA allocations with the World Bank to actually pay for this land and make it available to investors. So what it is that when you have the sovereign coming in at this stage, coming in at this level, it means whoever comes in, be it private sector or a commercial bank, a private equity firm or whatever, you are coming in to a place which the path has been laid for you already. And that is where we dictate how you invest, at what rate you invest, the sort of technology you should bring. So that is how we are doing to ensure that funding, even in agriculture, is sustainable, but ensuring that we do the heavy lifting. The other thing we are also doing is to what we call sustainability in agriculture financing. We have established, or we have launched, what we call the Agriculture Road Project, which is also about a $300 million project to ensure that roads leading to our agricultural sectors are in good shape. When the roads are in good shape, risks to banks reduces, making it comfortable, making banks feeling comfortable, and making farmers or even other semi-commercial farmers credit-worthy to banks. So these are the measures we are taking. First of all, by ensuring that we become attractive as a nation because of our sovereign risk rating, and also to ensure that we are making some fiscal and financial investment into critical sectors of the economy to ensure that the private sector comes in and at a lower risk.
Thank you very much. This time I'll not get your name wrong. I'll call it Mr. Frederick Emerson. Having said that, thank you so much for giving us some more insight. First of all, from the environmental and social risk perspective, either in line with the IFC performance standard or Africa Development Bank integrated safeguard system, as you acquire land, make sure you compensate the project affected persons. It's critical. And also make sure that you go in line with the resettlement action plan where needed. Nonetheless, thank you very much for that insight that you've given us. What you've also understood here is that, yes, you are making the country investment destination. I recall, I work with African Development Bank in Nigeria. They often say that, yes, Ghana is the gateway, Nigeria is the destination. Let's just have a reversal. Okay, please, let's work towards that to make sure that happens and makes it a reality. Thanks a lot for giving us insight on the sovereign rating and how it will also enable flows. We really appreciate. But talking about this blended financing, I think we can see also, it's also important for us to hear from the regulator, because this is a critical de-risking tool that will make access to financing more affordable and more accessible. So from where you sit, sir, the governor, from the Bank of Ghana, and Dr. Jallo, this same question will come to you just in case if you also want to make any contribution. So blended financing as a key de-risking tool, what is Bank of Ghana doing in making this a reality?
So, Musa, generally, yes, we have the power to create an enabling environment, generally, broadly. And we are able to do this through our regulatory, functions. As I mentioned, we've already issued some directives on climate risk and the likes. We'll continue to do that. To the extent that we are able to encourage blended financing, we will do all we can to create that type of environment. But beyond that, Musa, what I'm thinking is it's got to be two approaches: regulation, but also the use of incentives. In what way can we use incentives to engender some of these, behavior changes? And right now, what I'm thinking is, why can't we sponsor a special award for banks that turn out to be the most compliant when it comes to ESG issues at the end of the day? The central bank or the Ministry of Finance, they are here. They hold all the purse. The Minister of Finance can decide to sponsor it, very good price for whichever commercial bank, emerges as the best when it comes to ESG, compliance. And so that is what I want to put on the table. Maybe we should move towards the creation of incentives, going forward. We believe that can also stimulate the kind of changes that we want to see going forward. But all options are on the table. All options are on the table. This is 10 years of work, Musa, and we are resolved to take it forward.
You're
Thank
really
you.
achieving, sir. Thank you very much. Dr. Jallo, do you have any insight into what regarding the using blended financing to de-risk access to capital for green financing?
Yes, it makes logical sense. Blended financing comes in because one end of the financing is too expensive. So you find a second one that can blend it that can blend it into a smaller, manageable investment. Because most of these projects is green investment projects. They don't have the return on investment as the other ones would have, like distributive trade in most of our developing economies. So they will not be they may not be able to be profitable if they just go into the market rate that exists for such investments from the commercial banks. So stepping in and then offering some guarantees, as Governor is explaining, could be a way of helping blend that and make it manageable for smaller SMEs, for example, that they can access. For the Gambia, we are not as advanced as Ghana is. It was in March that we launched our program on climate prosperity investment and financing strategy. We had a climate finance roundtable in March, supported of course by the IMF. And there were three work streams that emanated from him. One is taxonomy, which is coordinated by the central bank, and the blended finance, coordinated by the Minister of Finance, as well as project preparation. So we are really, in this case, stepping aside and letting the ministry take the lead and see where they will come. Eventually they will loop down to their national treasury accounts and so on and so forth. So we know a role for us will be there at the time, but we'll let them take the lead for now on that one, as of now.
Thank you very much, Dr. Jallo. So indeed, yes, award is important, but we also need to be mindful of greenwashing. Okay, so in that case, it's important to set up a credible, measurable indicators that will be used in coming out with this award and recognition. I think about 10 years ago, Ghana Bankers Award set up a special, a dedicated criteria or an award scheme on sustainable banking. Perhaps it's something that can be leveraged and then continue. Having said that, I'm coming back to you, Mr. Frederick Emisa. We've been talking about blended financing, but another thing that also important is how do we leverage our partnership, Ghana's international financial institution partnership, in mobilizing concessionary funding. We've heard of the Green Climate Fund. We've also heard of sustainability-based performance pricing incentive, among others, which tend to dovetail into the incentives that the Honorable Distinguished Governor talked about. What are the policies from your ministry to enable, one, the regulator, as well as the banking industry, as well as other industries that are associated to fund mobilization to assess this concessionary funding, sir? Mr.
So I mentioned the National Sustainable Finance Framework, which the ministry is leading in its development, which would shed light on all of these areas, all of these questions. But the other thing is that we, as the Ministry of Finance, have some form of convening power that we are engaging to ensure that we align all of these policies, and also using the platforms we get internationally to advocate for some of these climate finances into this country. We also want to encourage even banks and other institutions that in the application to some of these finances, I think EcoBank has been able to, has been selected to receive some funding from the Climate Finance Fund. What it is that any support that they require from the sovereign, from the states, we are willing to back them to ensure that even if it means putting in a word on their behalf at the international stage, we are willing to do that to ensure that these funds are flowing. But on the larger scale, for us, we're also looking at many other ways. We've been shut out of the international bond market, so we are not looking at issuing bonds. But you see, when you are issuing bonds, you may consider some certain things like the either green bonds and all these things. These are not things we are looking at now, but these are things which other countries have employed. Yeah. That's the other nations are also looking at. what we are saying is that for us as the sovereign,
Yeah.
we are going to ensure that we provide the enabling environment, that's the macroeconomic stability, and also working with the monetary authority, we provide both monetary forbearance and fiscal forbearance to institutions or financial institutions which supports the government's agenda of sustainable finance.
Excellent. So indeed, capital moves where policy is predictable.
Yes.
Okay, I really appreciate that. So my panelists, what would be your last word to your audience? Let me start with Mr. Frederick Emisai.
Yes, I would like to, first of all, I would like to congratulate the governor and the Bank of Ghana and all the stakeholders in ensuring that this roadmap has been launched. And we also want to assure everyone, including the international agency, then our development partners, that will give our maximum best. Did I say minimum? Our maximum best to ensure that this roadmap becomes not just another document, but an actionable architecture for us
and it's
all.
effectively implemented.
Effectively implemented.
Thank you,
Thank
Dr.
you.
Jallo. Thank you, Mr. Minister.
Okay,
Dr. Jallo.
before I say that, I would just like to extend on behalf of the governor, Boasedi, for whom I'm representing, was delegating him to represent here, that we want to extend our thanks and appreciation to the governor, Dr. Johnson Asiama, the staff of the Bank of Ghana, the governor, people of Ghana, for the hospitality that was extended to us when we came since our arrival in Accra. And I personally am very appreciative of the invitation to serve as a panelist here. And I also recognize and appreciate the excellent work and organization involved in this launching ceremony. And on that, I also congratulate the Bank of Ghana for this very successful launch. So what I would want to leave the audience with is what I started with, is that I believe that the challenge before us is not really the lack of capital. As we've seen, there are lots of other avenues that we can mobilize domestically, internally. There are lots of financing outside external financing, Jeff and others, but also there are opportunities for us to create a lot of fund to complement that's coming outside. Yes. That we can. I just want to provoke our environmental colleagues here. When I was doing this writing of yesterday, I noticed that the nationwide Ghana's tropical forest holds about 1.132 billion tons of carbon in biomass. Now, recent economy is foraying into environment, so forgive me if I make a mistake here. And this is as an equivalent of 4.15 gigatons of carbon dioxide. Now, if you now try to find the cost of that carbon dioxide that the Ghanaian forests are holding in biomass, if you use the social cost of carbon at US $190 per ton of carbon dioxide, the total cost of the carbon that is sequestered there is $789 billion. $789 billion. $89 billion. Now, there are also some more conservative ones. The voluntary carbon market, the current blended portfolio would range from $25 to $80, and that's from 104 to 332. 104 billion to 232 billion. And then if you use the tech-based permanent removal and biochar, that range from $150 to $400, is 623 to 1.6 billion. Now, so again, you look at it, that stock of 63 billion. So I think there is a need also for us to have a strong African coordinated voice in these discussions, in these conversations. As a central banker, I'm waiting to be invited to that discourse, because we're not leading it. It is the Minister of Environment and the stakeholders that are leading this. But as we've seen nowadays, it's no longer monetary policy is no longer orthodoxy of only of only price stability. It's everything. To maintain a price stability, external stability, financial sustainability, we have to work with the other sectors as well. So I think that is something we need to keep in mind.
Absolutely. But thank you very much for that elaborate intervention you just made. Are we looking forward to see Gambian also launching the sustainable banking, sustainable finance roadmap in future?
Yes, we are on that road. Yes, and I've been and we will really turn back, come for support learn from the experience of our colleagues here in Ghana to do that as well.
Thank you, sir, Dr. Jallo. Dr. Siama, your closing or
Well,
last
just to thank everyone for being here this morning, and in particular my colleague regulators from SEC, NPRA, the securities industry. I think that now that the roadmap has been launched, we can take up the key priorities, at the level of the Financial Stability Council. That's a forum where all regulators, we act together. And I want to, believe that if we take it up on that platform, we'll be able to drive, the various actions and the priorities. Now, the second thing I want to say is that, you see, ESG issues, climate risk issues, they do not observe boundaries or borders. So it's not just about Ghana. Something happens in Togo, it impacts on Ghana, etc. And so we have to be continually heard when it comes to global finance discussions. And so for people like you at the African Development Bank, there's a lot you can do, to support this roadmap going forward. So thank you very much, Mr. Musa. Keep engaging with us. Thank you.
Thank you very much, Dr. Siama. So, audience, you've heard. Let me hear it again. So before I allow them to step down, let me just give you a quick round of a recap of maybe in 3 or 4 sentences of what we've actually discussed today. So actually, today's conversation, it goes beyond asking whether central banks have a role to play in sustainable finance. So what they believe is that the question has largely been answered by our panelists, including representatives of the Honorable Minister. So the more important question that exists now is what role? How far should that role extend? And what practical action can unlock the scale of green investment our economy urgently needs? And on that note, ladies and gentlemen, please, let's give our panelists another round of applause, please.
And let's hear it for our
We
able
cannot do
moderator.
that alone without also recognizing the members of the industries, the steering committee that actually put this together, as well as the Bank of Ghana internal team that also coordinate all this activity leading to this event. And of course, our MC, thank you. Dalo.
My reward is always in heaven.
Thank you very much. We really appreciate your support.
Thank you for giving it to me.
Okay, on that note, thank you very much.
A round of applause for our panel. How about a group photo together? Photographers, let's capture the panel. And that was a beautiful conversation on the role of central banks and other state agencies in creating an enabling environment to unlock green capital for sustainable development. We're grateful to you, our able moderator, Mr. Musa Salah, Senior Environmental and Social Safeguards and Compliance Officer at the AFDB. To you, the Governor of the Bank of Ghana, Dr. Johnson Panditi Siama, the Technical Advisor to the Minister for Finance, Mr. Frederick Emisa, and the Deputy Governor of the Central Bank of the Gambia, Dr. Abdoulaye Sere Jallo. Please, a round of applause once again. And so, for exactly 1 hour, 58 minutes, ours has been a labor of love here at the launch of the Ghana Sustainable Finance Roadmap as we dwell on the theme, Achieving Regulatory Convergence on ESG, Promoting a Resilient and Sustainable Future for Ghana. On a lighter note, Dr. Jallo, I happen to live in the Gambia. Yes, for 2 years. My parents were there for 19 years, so I know the place like the back of my palm. Interestingly, the first governor of the Bank of Ghana, Dr. What's his name? Oh, no. I've forgotten his name, but he was our landlord. No. I've forgotten his name. I'll get. First governor. Yes, sure. I'll get it for you during the break. But ladies and gentlemen, for now, we pause and go over for lunch. This is the arrangement for lunch. In the adjoining room, all our dignitaries will take leave of us first. I'm talking about our governors, our ministers and their representatives, together with heads of institutions. We will all be led in sections to join them when it's our turn. Lunch is exactly for 1 hour. We shall reconvene here and then proceed with part 2 of the rest of the program. Bon appetit. TGG Sengo. That's the name. TGG Sengo. It just registered.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities and directing capital towards investments that generate long-term value for both humans and the planet. Ghana's Sustainable Finance Roadmap provides a practical and forward-looking framework to guide this transformation. It charts a pathway for mobilizing green and sustainable finance, strengthening the management of climate-related financial risks, and embedding environmental, social, and governance principles across our financial institutions and markets. More importantly, it reflects Ghana's commitment to ensuring that our financial system remains responsive to the needs of today's generation while safeguarding the prosperity of generations yet to come. The development of this roadmap has been made possible through collaboration and a shared sense of purpose. I commend our fellow regulators, i.e. the National Insurance Commission, the National Pensions Regulatory Authority, and the Securities and Exchange Commission for their partnership and leadership throughout this process. I also extend my deepest appreciation to our development partners, particularly the International Finance Corporation, the Sustainable Banking and Finance Network, and the Swiss State Secretariat for Economic Affairs, whose contributions and unwavering commitment have been instrumental in bringing this roadmap to fruition. I wish to particularly acknowledge the International Finance Corporation for its valuable support during both the development and launch phases of this initiative. I also thank the Ministry of Finance for its oversight and guidance in ensuring alignment with Ghana's national climate and development priorities. My appreciation further goes to the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers, Ghana, for their invaluable contributions as well. To the investment community and private sector, I want to reaffirm that Ghana remains committed to fostering an enabling environment for sustainable investment and responsible business growth. We recognize that a transition to a sustainable economy will require innovation, to require partnership, and it will require long-term commitment. And we stand ready to support that journey. As we launch this roadmap today, let us see it not as the end of a process, but as the beginning of a new chapter, one that calls for collective action, bold thinking, and unwavering dedication. Together, we can build a financial system that is not only strong and inclusive, but also sustainable, resilient, and capable of supporting Ghana's development aspirations for decades to come. Thank you, and I wish us all a successful and impactful event.
As part of our commitment to financial literacy, we want to help Ghanaians better understand what the Bank of Ghana does. Do you know what the Bank of Ghana does? Let's start with the basics. Bank of Ghana is not a commercial bank. Commercial banks are the ones you and I use. Bank of Ghana is a central bank. You cannot open an account there. You cannot apply for a personal loan. It does not compete for customers. The Bank of Ghana has a clear mandate by law. That mandate is, first, to ensure price stability. Second, to contribute to the promotion and maintenance of financial stability. Third, to promote economic growth and development. Let's briefly look at each one. First, price stability. Price stability means keeping inflation low, stable, and predictable, so the prices of everyday items that you and I purchase don't suddenly rise and make life harder for our households and businesses. Second, financial stability. It means keeping the financial system strong and reliable by supervising banks and other financial institutions, setting standards, and reducing the risk of instability, so money continues to flow safely between people, businesses, and banks. Third, supporting economic growth and development. When prices are stable and the financial system is strong, businesses can invest, people can access credit, and the economy can grow. To achieve these goals, the Bank of Ghana performs several key functions, including setting monetary policy, supervising banks and financial institutions, managing the country's currency, and overseeing payment systems. In summary, Bank of Ghana is not a commercial bank. Commercial banks serve you and I, but Bank of Ghana serves the financial system and the broader economy. It exists to maintain price stability, to preserve confidence in the currency, and to support a resilient financial system. That is what Bank of Ghana does.
Sani ebeye na omanfo ebenya sikasem mu enimdie nti yepese omanfo enya ntiase ewo dwuma Bank of Ghana eyim. Unim ade potia Bank of Ghana eye. Oma yemfemfrasie. Bank of Ghana enye sikakrabra bia keke. Ye ka sikakrabra na eye de menu mi enu nyina anim no. Bank of Ghana eye bank batan. Untumi enkobie account wo ho. Untumi enkoje bosia wo ho. Ena ene bank ahodo no nso ensia kan ewo omanfo ho. Bank of Ghana ewo dwumadie potia emrahye no. Na saa dwumadie no ne se ne di kan obehwe ama enema bo agina. Ne tosum yenu obeboa abo dawuro ahwe ama sikasem totoye agina. Na de tosum yensa obehwe ama sikasem mpuntuo akoso. Muma yemfa na mako. Ne di kan no sanya enema bo ebeba fam na agina faako na yenyamu ahotoso. Sanya enema menu mienu tono daadaa no ne bo enkoso ntentem na emfa ahokyere emre omanfo eni enwuma ahodo. Ne toso mienu yebehwe ama sikasem ntotoye agina na enya ahoden ewo bra yedi yani edi sikakrabra ene sikanwuma ahodo no achi. yɛyɛ nhyehyɛeɛ a ɛbɛboa asi wɔ haw ahodoɔ ano sɛnea sika bɛtumi adi akɔneaba wɔ ɔmanfoɔ enwuma ne sikakwabea ahodoɔ no ntam. Ne ɛtɔ so mmiɛnsa, sɛ nneɛma boɔ gyina faako na sikasɛm ho ntotoeɛ gyina ne nan so a, enwuma ahodoɔ tumi nya sika de ɛhyɛm, ɔmanfoɔ tumi nya bosea na sikasɛm tu mpɔn. Sɛnea weinom nyinaa ɛbɛbɛ mu nti, Bank of Ghana ɛyɛ nhyehyɛeɛ pii a ebi ne sɛ wɔyɛ sikasɛm ho mmara, yɛde yɛni di sikakorabea ne sikannwuma ahodoɔ no nyinaa akyi, na afei yɛtoto ɔman yi sika ne akatua ahodoɔ ho nsɛm yie. Sɛ yɛbɔ no tɔfa a, Bank of Ghana ɛnyɛ sikakorabea kɛkɛ. Sikakorabea ahodoɔ no ɛno nea menu mmienu nyinaa anim no, ɛno na ɛsom yɛ mmienu. Bank of Ghana deɛ ɔhwɛ sikasɛm ho dwadie ntotoeɛ so. Egyina hɔ ma sɛ ɔbɛhwɛ nneɛma boɔ, ɛbɛbɔ gyidie a yɛwɔ no wɔ yɛ sika no ho na yɛaboa abɔ yɛ sikasɛm no ho ban. Wei ne nea Bank of Ghana ɛyɛ.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities and directing capital towards investments that generate long-term value for both humans and the planet. Ghana's Sustainable Finance Roadmap provides a practical and forward-looking framework to guide this transformation. It charts a pathway for mobilizing green and sustainable finance, strengthening the management of climate-related financial risks, and embedding environmental, social, and governance principles across our financial institutions and markets. More importantly, it reflects Ghana's commitment to ensuring that our financial system remains responsive to the needs of today's generation while safeguarding the prosperity of generations yet to come. The development of this roadmap has been made possible through collaboration and a shared sense of purpose. I commend our fellow regulators, i.e. the National Insurance Commission, the National Pensions Regulatory Authority, and the Securities and Exchange Commission for their partnership and leadership throughout this process. I also extend my deepest appreciation to our development partners, particularly the International Finance Corporation, the Sustainable Banking and Finance Network, and the Swiss State Secretariat for Economic Affairs, whose contributions and unwavering commitment have been instrumental in bringing this roadmap to fruition. I wish to particularly acknowledge the International Finance Corporation for its valuable support during both the development and launch phases of this initiative. I also thank the Ministry of Finance for its oversight and guidance in ensuring alignment with Ghana's national climate and development priorities. My appreciation further goes to the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers, Ghana, for their invaluable contributions as well. To the investment community and private sector, I want to reaffirm that Ghana remains committed to fostering an enabling environment for sustainable investment and responsible business growth. We recognize that a transition to a sustainable economy will require innovation, to require partnership, and it will require long-term commitment. And we stand ready to support that journey. As we launch this roadmap today, let us see it not as the end of a process, but as the beginning of a new chapter, one that calls for collective action, bold thinking, and unwavering dedication. Together, we can build a financial system that is not only strong and inclusive, but also sustainable, resilient, and capable of supporting Ghana's development aspirations for decades to come. Thank you, and I wish us all a successful and impactful event.
As part of our commitment to financial literacy, we want to help Ghanaians better understand what the Bank of Ghana does. Do you know what the Bank of Ghana does? Let's start with the basics. Bank of Ghana is not a commercial bank. Commercial banks are the ones you and I use. Bank of Ghana is a central bank. You cannot open an account there. You cannot apply for a personal loan. It does not compete for customers. The Bank of Ghana has a clear mandate by law. That mandate is, first, to ensure price stability. Second, to contribute to the promotion and maintenance of financial stability. Third, to promote economic growth and development. Let's briefly look at each one. First, price stability. Price stability means keeping inflation low, stable, and predictable, so the prices of everyday items that you and I purchase don't suddenly rise and make life harder for our households and businesses. Second, financial stability. It means keeping the financial system strong and reliable by supervising banks and other financial institutions, setting standards, and reducing the risk of instability, so money continues to flow safely between people, businesses, and banks. Third, supporting economic growth and development. When prices are stable and the financial system is strong, businesses can invest, people can access credit, and the economy can grow. To achieve these goals, the Bank of Ghana performs several key functions, including setting monetary policy, supervising banks and financial institutions, managing the country's currency, and overseeing payment systems. In summary, Bank of Ghana is not a commercial bank. Commercial banks serve you and I, but Bank of Ghana serves the financial system and the broader economy. It exists to maintain price stability, to preserve confidence in the currency, and to support a resilient financial system. That is what Bank of Ghana does.
Sani ɛbɛyɛ na ɔmanfoɔ ɛbɛnya sikasɛm mu enimdie nti yɛpɛ sɛ ɔmanfoɔ ɛnya ntiaseɛ ɛwɔ dwuma a Bank of Ghana ɛyɛ mu. Wonim adeɛ pɔtee a Bank of Ghana ɛyɛ. Ɔma yɛmfa mfiri aseɛ. Bank of Ghana ɛnyɛ sikakorabea bi akɛkɛ. Yɛka sikakorabea na ɛyɛ deɛ menu mmienu nyinaa nim no. Bank of Ghana ɛyɛ bank baatan. Wontumi nkɔbie account wɔ hɔ. Wontumi nkɔgye bosia wɔ hɔ. Ɛna ɛne bank ahodoɔ no nso ɛnsi akan ɛwɔ ɔmanfoɔ ho. Bank of Ghana ɛwɔ dwumadie pɔtee a mmara hyɛ no. Na saa dwumadie no ne sɛ ne di kan ɔbɛhwɛ ama nneɛma bɔ agyina. Ne ɛtɔ so mmienu ɔbɛboa abɔ dawuro ahwɛ ama sikasɛm ntotoeɛ agyina. Na deɛ ɛtɔ so mmiɛnsa ɔbɛhwɛ ama sikasɛm mpuntuo akɔ so. Moma yɛmfa no maako maako. Ne di kan no sɛnea nneɛma boɔ ɛbɛba fam na agyina faako na yɛnya mu ahotɔsoɔ. Sɛnea nneɛma a mene mmienu tɔ no daadaa no ne boɔ ɛnkɔ so ntɛntɛm na ɛmfa ahokyerɛ ɛmmerɛ ɔmanfoɔ ne nnwuma ahodoɔ. Ne ɛtɔ so mmienu yɛbɛhwɛ ama sikasɛm ntotoeɛ agyina na ɛnya ahoɔden ɛwɔ berɛ a yɛde yɛni ɛredi sikakorabea ne sikannwuma ahodoɔ no akyi. Yɛyɛ nhyehyɛeɛ a ɛbɛboa asi wɔ haw ahodoɔ ano sɛnea sika bɛtumi adi akɔneaba ɛwɔ ɔmanfoɔ nnwuma ne sikakorabea ahodoɔ no ntam. Ne ɛtɔ so mmiɛnsa sɛ nneɛma boɔ gyina faako na sikasɛm ho ntotoeɛ gyina ne nan so a nnwuma ahodoɔ tumi nya sika de ɛhyɛm. Ɔmanfoɔ tumi nya bosia na sikasɛm tu mpɔn. Sɛnea weinom nyinaa ɛbɛba mu nti Bank of Ghana ɛyɛ nhyehyɛeɛ pii a ebi ne sɛ wɔyɛ sikasɛm ho mmara. Yɛde yɛni edi sikakorabea ne sikannwuma ahodoɔ no nyinaa akyi na afei yɛtoto ɔman yi sika ne akatua ahodoɔ ho nsɛm yie. Sɛ yɛbɔ no tɔfa a Bank of Ghana ɛnyɛ sikakorabea kɛkɛ. Sikakorabea ahodoɔ no ɛno nea menu mmienu nyinaa anim no ɛno na ɛsom yɛ mmienu. Bank of Ghana deɛ ɔhwɛ sikasɛm ho dwadie ntotoeɛ so. Egyina hɔ ma sɛ ɔbɛhwɛ nneɛma boɔ ɛbɛbɔ gyidie a yɛwɔ no wɔ yɛ sika no ho na yɛaboa abɔ yɛ sikasɛm no ho ban. Wei ne nea Bank of Ghana ɛyɛ.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities and directing capital towards investments that generate long-term value for both humans and the planet. Ghana's Sustainable Finance Roadmap provides a practical and forward-looking framework to guide this transformation. It charts a pathway for mobilizing green and sustainable finance, strengthening the management of climate-related financial risks, and embedding environmental, social, and governance principles across our financial institutions and markets. More importantly, it reflects Ghana's commitment to ensuring that our financial system remains responsive to the needs of today's generation while safeguarding the prosperity of generations yet to come. The development of this roadmap has been made possible through collaboration and a shared sense of purpose. I commend our fellow regulators, i.e. the National Insurance Commission, the National Pensions Regulatory Authority, and the Securities and Exchange Commission for their partnership and leadership throughout this process. I also extend my deepest appreciation to our development partners, particularly the International Finance Corporation, the Sustainable Banking and Finance Network, and the Swiss State Secretariat for Economic Affairs, whose contributions and unwavering commitment have been instrumental in bringing this roadmap to fruition. I wish to particularly acknowledge the International Finance Corporation for its valuable support during both the development and launch phases of this initiative. I also thank the Ministry of Finance for its oversight and guidance in ensuring alignment with Ghana's national climate and development priorities. My appreciation further goes to the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers, Ghana, for their invaluable contributions as well. To the investment community and private sector, I want to reaffirm that Ghana remains committed to fostering an enabling environment for sustainable investment and responsible business growth. We recognize that a transition to a sustainable economy will require innovation, to require partnership, and it will require long-term commitment. And we stand ready to support that journey. As we launch this roadmap today, let us see it not as the end of a process, but as the beginning of a new chapter, one that calls for collective action, bold thinking, and unwavering dedication. Together, we can build a financial system that is not only strong and inclusive, but also sustainable, resilient, and capable of supporting Ghana's development aspirations for decades to come. Thank you, and I wish us all a successful and impactful event.
As part of our commitment to financial literacy, we want to help Ghanaians better understand what the Bank of Ghana does. Do you know what the Bank of Ghana does? Let's start with the basics. Bank of Ghana is not a commercial bank. Commercial banks are the ones you and I use. Bank of Ghana is a central bank. You cannot open an account there. You cannot apply for a personal loan. It does not compete for customers. The Bank of Ghana has a clear mandate by law. That mandate is, first, to ensure price stability. Second, to contribute to the promotion and maintenance of financial stability. Third, to promote economic growth and development. Let's briefly look at each one. First, price stability. Price stability means keeping inflation low, stable, and predictable, so the prices of everyday items that you and I purchase don't suddenly rise and make life harder for our households and businesses. Second, financial stability. It means keeping the financial system strong and reliable by supervising banks and other financial institutions, setting standards, and reducing the risk of instability, so money continues to flow safely between people, businesses, and banks. Third, supporting economic growth and development. When prices are stable and the financial system is strong, businesses can invest, people can access credit, and the economy can grow. To achieve these goals, The Bank of Ghana performs several key functions, including setting monetary policy, supervising banks and financial institutions, managing the country's currency, and overseeing payment systems. In summary, Bank of Ghana is not a commercial bank. Commercial banks serve you and I, but Bank of Ghana serves the financial system and the broader economy. It exists to maintain price stability, to preserve confidence in the currency, and to support a resilient financial system. That is what Bank of Ghana does.
Sani ɛbɛyɛ na ɔmanfoɔ ɛbɛnya sikasɛm mu enimdie nti yɛpɛ sɛ ɔmanfoɔ ɛnya ntiaseɛ ɛwɔ dwuma a Bank of Ghana ɛyɛ mu. Wonim adeɛ pɔtee a Bank of Ghana ɛyɛ. Ɔma yɛmfa mfiri aseɛ. Bank of Ghana ɛnyɛ sikakorabea biara kɛkɛ. Yɛka sikakorabea na ɛyɛ deɛ mene mmienu nyinaa nim no. Bank of Ghana ɛyɛ bank baatan. Wontumi nkɔbie account wɔ hɔ. Wontumi nkɔgye bosia wɔ hɔ. Ɛna ɛne bank ahodoɔ no nso ɛnsi akan ɛwɔ ɔmanfoɔ ho. Bank of Ghana ɛwɔ dwumadie pɔtee a mmara hyɛ no. Na saa dwumadie no ne sɛ ne di kan ɔbɛhwɛ ama nneɛma bɔ agyina. Ne to so mmienu ɔbɛboa abɔ dawuro ahwɛ ama sikasɛm ntotoeɛ agyina. Na de to so mmiɛnsa ɔbɛhwɛ ama sikasɛm mpuntuo akɔ so. Moma yɛmfa no maako maako. Ne di kan no sɛnea nneɛma boɔ ɛbɛba fam na agyina faako na yɛnya mu ahotɔsoɔ. Sɛnea nneɛma a mene mmienu tɔ no daadaa no ne boɔ ɛnkɔ so ntɛntɛm na ɛmfa ahokyerɛ ɛmmerɛ ɔmanfoɔ ne enwuma ahodoɔ. Ne to so mmienu yɛbɛhwɛ ama sikasɛm ntotoeɛ agyina na ɛnya ahoɔden ɛwɔ bere a yɛde yɛni ɛdi sikakorabea ne sikanwuma ahodoɔ no akyi. Yɛyɛ nhyehyɛeɛ a ɛbɛboa asi wɔ haw ahodoɔ ano sɛnea sika bɛtumi adi akɔneaba ɛwɔ ɔmanfoɔ enwuma ne sikakorabea ahodoɔ no ntam. Ne to so mmiɛnsa sɛ nneɛma boɔ gyina faako na sikasɛm ho ntotoeɛ gyina ne nan so a enwuma ahodoɔ tumi nya sika de ɛhyɛm. Ɔmanfoɔ tumi nya bosia na sikasɛm tu mpɔn. Sɛnea weinom nyinaa ɛbɛba mu nti Bank of Ghana ɛyɛ nhyehyɛeɛ pii a ebi ne sɛ wɔyɛ sikasɛm ho mmara. Yɛde yɛni edi sikakorabea ne sikanwuma ahodoɔ no nyinaa akyi na afei yɛtoto ɔman yi sika ne akatua ahodoɔ ho nsɛm yie. Sɛ yɛbɔ no tɔfa a Bank of Ghana ɛnyɛ sikakorabea kɛkɛ. Sikakorabea ahodoɔ no ɛno nea mene mmienu nyinaa anim no ɛno na ɛsom yɛ mmienu. Bank of Ghana deɛ ɔhwɛ sikasɛm ho dwadie ntotoeɛ so. Egyina hɔ ma sɛ ɔbɛhwɛ nneɛma boɔ ɛbɛbɔ gyidie a yɛwɔ no wɔ yɛ sika no ho na yɛaboa abɔ yɛ sikasɛm no ho ban. Wei ɛne nea Bank of Ghana ɛyɛ.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities and directing capital towards investments that generate long-term value for both humans and the planet. Ghana's Sustainable Finance Roadmap provides a practical and forward-looking framework to guide this transformation. It charts a pathway for mobilizing green and sustainable finance, strengthening the management of climate-related financial risks, and embedding environmental, social, and governance principles across our financial institutions and markets. More importantly, it reflects Ghana's commitment to ensuring that our financial system remains responsive to the needs of today's generation while safeguarding the prosperity of generations yet to come. The development of this roadmap has been made possible through collaboration and a shared sense of purpose. I commend our fellow regulators, i.e., the National Insurance Commission, the National Pensions Regulatory Authority, and the Securities and Exchange Commission for their partnership and leadership throughout this process. I also extend my deepest appreciation to our development partners, particularly the International Finance Corporation, the Sustainable Banking and Finance Network, and the Swiss State Secretariat for Economic Affairs, whose contributions and unwavering commitment have been instrumental in bringing this roadmap to fruition. I wish to particularly acknowledge the International Finance Corporation for its valuable support during both the development and launch phases of this initiative. I also thank the Ministry of Finance for its oversight and guidance in ensuring alignment with Ghana's national climate and development priorities. My appreciation further goes to the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers, Ghana, for their invaluable contributions as well. To the investment community and private sector, I want to reaffirm that Ghana remains committed to fostering an enabling environment for sustainable investment and responsible business growth. We recognize that a transition to a sustainable economy will require innovation, to require partnership, and it will require long-term commitment. And we stand ready to support that journey. As we launch this roadmap today, let us see it not as the end of a process, but as the beginning of a new chapter, one that calls for collective action, bold thinking, and unwavering dedication. Together, we can build a financial system that is not only strong and inclusive, but also sustainable, resilient, and capable of supporting Ghana's development aspirations for decades to come. Thank you, and I wish us all a successful and impactful event.
As part of our commitment to financial literacy, we want to help Ghanaians better understand what the Bank of Ghana does. Do you know what the Bank of Ghana does? Let's start with the basics. Bank of Ghana is not a commercial bank. Commercial banks are the ones you and I use. Bank of Ghana is a central bank. You cannot open an account there. You cannot apply for a personal loan. It does not compete for customers. The Bank of Ghana has a clear mandate by law. That mandate is, first, to ensure price stability. Second, to contribute to the promotion and maintenance of financial stability. Third, to promote economic growth and development. Let's briefly look at each one. First, price stability. Price stability means keeping inflation low, stable, and predictable, so the prices of everyday items that you and I purchase don't suddenly rise and make life harder for our households and businesses. Second, financial stability. It means keeping the financial system strong and reliable by supervising banks and other financial institutions, setting standards, and reducing the risk of instability, so money continues to flow safely between people, businesses, and banks. Third, supporting economic growth and development. When prices are stable and the financial system is strong, businesses can invest, people can access credit, and the economy can grow. To achieve these goals, the Bank of Ghana performs several key functions, including setting monetary policy, supervising banks and financial institutions, managing the country's currency, and overseeing payment systems. In summary, Bank of Ghana is not a commercial bank. Commercial banks serve you and I, but Bank of Ghana serves the financial system and the broader economy. It exists to maintain price stability, to preserve confidence in the currency, and to support a resilient financial system. That is what Bank of Ghana does.
Sani ɛbɛyɛ na ɔmanfoɔ ɛbɛnya sikasɛm mu enimdie nti yɛpɛ sɛ ɔmanfoɔ ɛnya ntiaseɛ ɛwɔ dwuma a Bank of Ghana ɛyɛ mu. Wonim adeɛ pɔtee a Bank of Ghana ɛyɛ. Ɔma yɛmfa mfiri aseɛ. Bank of Ghana ɛnyɛ sikakorabea biara kɛkɛ. Yɛka sikakorabea a na ɛyɛ deɛ mene mmienu nyinaa anim no. Bank of Ghana ɛyɛ bank baatan. Wontumi nkɔbie account wɔ hɔ. Wontumi nkɔgye bosia wɔ hɔ. Ɛna ɛne bank ahodoɔ no nso ɛnsi akan ɛwɔ ɔmanfoɔ ho. Bank of Ghana ɛwɔ dwumadie pɔtee a mmara hyɛ no. Na saa dwumadie no ne sɛ ne di kan ɔbɛhwɛ ama nneɛma bɔ agyina. Ne ɛtɔ so mmienu ɔbɛboa abɔ dawuro ahwɛ ama sikasɛm ntotoeɛ agyina. Na deɛ ɛtɔ so mmiɛnsa ɔbɛhwɛ ama sikasɛm mpuntuo akɔ so. Moma yɛmfa no maako maako. Ne di kan no sɛnea nneɛma boɔ ɛbɛba fam na agyina faako na yɛnya mu ahotɔsoɔ. Sɛnea nneɛma a mene mmienu tɔ no daadaa no ne boɔ ɛnkɔ so ntɛntɛm na ɛmfa ahokyerɛ ɛmmerɛ ɔmanfoɔ ne enwuma ahodoɔ. Ne ɛtɔ so mmienu yɛbɛhwɛ ama sikasɛm ntotoeɛ agyina na ɛnya ahoɔden ɛwɔ bere a yɛde yɛni ɛredi sikakorabea ne sikanwuma ahodoɔ no akyi. Yɛyɛ nhyehyɛeɛ a ɛbɛboa asi wɔ haw ahodoɔ ano sɛnea sika bɛtumi adi akɔneaba ɛwɔ ɔmanfoɔ enwuma ne sikakorabea ahodoɔ no ntam. Ne ɛtɔ so mmiɛnsa sɛ nneɛma boɔ gyina faako na sikasɛm ho ntotoeɛ gyina ne nan so a enwuma ahodoɔ tumi nya sika de ɛhyɛm. Ɔmanfoɔ tumi nya bosia na sikasɛm tu mpɔn. Sɛnea weinum nyinaa ɛbɛba mu nti Bank of Ghana ɛyɛ nhyehyɛeɛ pii a ebi ne sɛ wɔyɛ sikasɛm ho mmara. Yɛde yɛni edi sikakorabea ne sikanwuma ahodoɔ no nyinaa akyi na afei yɛtoto ɔman yi sika ne akatua ahodoɔ ho nsɛm yie. Sɛ yɛbɔ no tɔfa a Bank of Ghana ɛnyɛ sikakorabea kɛkɛ. Sikakorabea ahodoɔ no ɛno nea menu mmienu nyinaa anim no ɛno na ɛsom yɛ mmienu. Bank of Ghana deɛ ɔhwɛ sikasɛm ho dwadie ntotoeɛ so. Egyina hɔ ma sɛ ɔbɛhwɛ nneɛma boɔ ɛbɛbɔ gyidie a yɛwɔ no wɔ yɛ sika no ho na yɛaboa abɔ yɛ sikasɛm no ho ban. Wei ne nea Bank of Ghana ɛyɛ.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities and directing capital towards investments that generate long-term value for both humans and the planet. Ghana's Sustainable Finance Roadmap provides a practical and forward-looking framework to guide this transformation. It charts a pathway for mobilizing green and sustainable finance, strengthening the management of climate-related financial risks, and embedding environmental, social, and governance principles across our financial institutions and markets. More importantly, it reflects Ghana's commitment to ensuring that our financial system remains responsive to the needs of today's generation while safeguarding the prosperity of generations yet to come. The development of this roadmap has been made possible through collaboration and a shared sense of purpose. I commend our fellow regulators, i.e., the National Insurance Commission, the National Pensions Regulatory Authority, and the Securities and Exchange Commission for their partnership and leadership throughout this process. I also extend my deepest appreciation to our development partners, particularly the International Finance Corporation, the Sustainable Banking and Finance Network, and the Swiss State Secretariat for Economic Affairs, whose contributions and unwavering commitment have been instrumental in bringing this roadmap to fruition. I wish to particularly acknowledge the International Finance Corporation for its valuable support during both the development and launch phases of this initiative. I also thank the Ministry of Finance for its oversight and guidance in ensuring alignment with Ghana's national climate and development priorities. My appreciation further goes to the Institute of Chartered Accountants, Ghana, and the Chartered Institute of Bankers, Ghana, for their invaluable contributions as well. To the investment community and private sector, I want to reaffirm that Ghana remains committed to fostering an enabling environment for sustainable investment and responsible business growth. We recognize that a transition to a sustainable economy will require innovation, to require partnership, and it will require long-term commitment. And we stand ready to support that journey. As we launch this roadmap today, let us see it not as the end of a process, but as the beginning of a new chapter, one that calls for collective action, bold thinking, and unwavering dedication. Together, we can build a financial system that is not only strong and inclusive, but also sustainable, resilient, and capable of supporting Ghana's development aspirations for decades to come. Thank you, and I wish us all a successful and impactful event.
As part of our commitment to financial literacy, we want to help Ghanaians better understand what the Bank of Ghana does. Do you know what the Bank of Ghana does? Let's start with the basics. Bank of Ghana is not a commercial bank. Commercial banks are the ones you and I use. Bank of Ghana is a central bank. You cannot open an account there. You cannot apply for a personal loan. It does not compete for customers. The Bank of Ghana has a clear mandate by law. That mandate is, first, to ensure price stability. Second, to contribute to the promotion and maintenance of financial stability. Third, to promote economic growth and development. Let's briefly look at each one. First, price stability. Price stability means keeping inflation low, stable, and predictable, so the prices of everyday items that you and I purchase don't suddenly rise and make life harder for our households and businesses. Second, financial stability. It means keeping the financial system strong and reliable by supervising banks and other financial institutions, setting standards, and reducing the risk of instability, so money continues to flow safely between people, businesses, and banks. Third, supporting economic growth and development. When prices are stable and the financial system is strong, businesses can invest, people can access credit, and the economy can grow. To achieve these goals, the Bank of Ghana performs several key functions, including setting monetary policy, supervising banks and financial institutions, managing the country's currency, and overseeing payment systems. In summary, Bank of Ghana is not a commercial bank. Commercial banks serve you and I, but Bank of Ghana serves the financial system and the broader economy. It exists to maintain price stability, to preserve confidence in the currency, and to support a resilient financial system. That is what Bank of Ghana does.
Sani ebeye na omanfo ebenya sikasem mu enimdie nti yepese omanfo enya ntiase ewo dwuma Bank of Ghana eyim. Unim ade potia Bank of Ghana eye. Oma yemfemfrasie. Bank of Ghana enye sikakrabra bia keke. Ye ka sikakrabra na eye de menu mienu nyina nim no. Bank of Ghana eye bank batan. Untumi enkobie account wo ho. Untumi enkoje bosia wo ho. Ena ene bank ahodo no nso ensia kan ewo omanfo ho. Bank of Ghana ewo dwumadie potia emrahye no. Na saa dwumadie no ne se ne di kan obehwe ama enema bo agina. Ne tosum yenu obeboa abo dawuro ahwama sikasem totoye agina. Na de tosum yensa obehwe ama sikasem mpuntuo akoso. Muma yemfa na mako. Ne di kan no sanya enema bo ebeba fam na agina faako na yenyamu ahotoso. Sanya enema menu mienu tono daadaa no ne bo enkoso ntentem na emfa ahokyere emre omanfo eni enwuma ahodo. Ne toso mienu yebehwe ama sikasem ntotoye agina na enya ahoden ewo bra yedi yani edi sikakrabra ene sikanwuma ahodo no achi. Ye nhyehyeye a ebeboa esi wo hawa ahodo ano sania sika betumi edi akoniaba ewo manfo enwuma ene sikakwabra ahodo no entem. Ne toso miensa se eniema bo egina faako na sikasem ho ntotoye egina ne naso a enwuma enye sikakwabra bia keke. Ye ka sikakwabra na eye de menu mienu nyina anim no. Bank of Ghana eye bank batan. Untumi enkobie account wo ho. Untumi enkoje bosia wo ho. Ena ene bank ahodo no nso ensia kan ewo omanfo ho. Bank of Ghana ewo dwumadie potia emrahye no. Na saa dwumadie no ne se ne di kan obehwe ama enema bo agina. Ne tosum yenu obeboa abo dawuro ahwama sikasem totoye agina. Na de tosum yensa obehwe ama sikasem mpuntuo akoso. Muma yemfa na mako. Ne di kan no sanya enema bo ebeba fam na agina faako na yenyamu ahotoso. sɛnea nneɛma a me ne wo mmienu tɔ no daadaa no ne boɔ nkɔ so ntɛntɛm na ɛmfa ahokyerɛ mmerɛ ɔmanfoɔ ne nnwuma ahodoɔ. Na ɛtɔ so mmienu, yɛbɛhwɛ ama sikasɛm ntotoeɛ agyina na ɛnya ahoɔden ɛwɔ berɛ a yɛde yɛni ɛredi sikakorabea ne sikannwuma ahodoɔ no akyi. Yɛyɛ nhyehyɛeɛ a ɛbɛboa asi wɔ haw ahodoɔ ano sɛnea sika bɛtumi adi akɔneaba ɛwɔ ɔmanfoɔ nnwuma ne sikakorabea ahodoɔ no ntam. Na ɛtɔ so mmiɛnsa, sɛ nneɛma boɔ gyina faako na sikasɛm ho ntotoeɛ gyina ne nan so a nnwuma ahodoɔ tumi nya sika de ɛhyɛm, ɔmanfoɔ tumi nya bosea na sikasɛm tu mpɔn. Sɛnea weinom nyinaa ɛbɛba mu nti, Bank of Ghana ɛyɛ nhyehyɛeɛ pii a ebi ne sɛ wɔyɛ sikasɛm ho mmara, yɛde yɛni di sikakorabea ne sikannwuma ahodoɔ no nyinaa akyi, na afei yɛtoto ɔman yi sika ne akatua ahodoɔ ho nsɛm yie. Sɛ yɛbɔ no tɔfa a, Bank of Ghana ɛnyɛ sikakorabea kɛkɛ. Sikakorabea ahodoɔ no ɛno nea menu mmienu nyinaa anim no, ɛno na ɛsom yɛ mmienu. Bank of Ghana deɛ ɔhwɛ sikasɛm ho dwadie ntotoeɛ so. Egyina hɔ ma sɛ ɔbɛhwɛ nneɛma boɔ, ɛbɛbɔ gyidie a yɛwɔ no wɔ yɛ sika no ho na yɛaboa abɔ yɛ sikasɛm no ho ban. Wei ne nea Bank of Ghana ɛyɛ.
Distinguished guests, colleagues, development partners, ladies and gentlemen, it gives me immense pleasure to welcome you to the official launch of Ghana's Sustainable Finance Roadmap, a significant milestone in our collective journey towards building a more resilient, a more inclusive, and a sustainable future for our country. Today is not merely the launch of a document. It is the unveiling of a shared vision and a clear statement of intent. It reflects our determination to harness the power of finance as a force for positive change and to ensure that economic progress goes hand in hand with environmental stewardship and social responsibility. We meet at a time when the realities of climate change are becoming increasingly evident. Across the world, communities are confronting the effects of rising temperatures, extreme weather events, environmental degradation, and growing social vulnerabilities. These challenges remind us that sustainability is no longer a choice, it is an imperative. Yet within these challenges lie tremendous opportunities. Opportunities to innovate, to invest differently, to create new industries, and to build economies that are stronger, that are greener, and that are more inclusive. The financial sector has a pivotal role to play in unlocking these opportunities.
To align finance with long-term development, IFC and SECO's ESG advisory program supports capacity building and technical input for implementation, and that is what they promised us. Our minister talked about the three pillars or the three strategic outcomes: strengthening financial system resilience, mobilizing capital for green projects, and attracting future-oriented investment. He also talked about how financial institutions must integrate ESG, train teams, disclose climate exposures, and finance Ghana's transition. For me, our governor was really emphatic on a lot of things, where he also touched on the three unified, fragmented efforts under three pillars: ESG integration, climate risk management, and financing ESG. But he talked about how the success of this whole endeavor depends on implementation, attracting domestic and international capital, and positioning Ghana as a regional leader. We then went into the panel discussion where, amongst many other things, we explored the barriers to green capital, which includes shallow markets, lack of bankable projects, and underdeveloped frameworks. We talked about blended finance incentives and credible ESG indicators, which were proposed to de-risk and encourage sustainable investment. The takeouts for me are what we must focus on. On unified regulatory commitment drives, they talked about how collaboration among the Bank of Ghana, the Ministry, NIC, MPRA, SEC, and development partners like IFC and SECO is central to the roadmap's credibility and implementation. On the roadmap pillars, that's ESG integration, climate risk, and green capital, they talked about practical steps and clear ownership being the pillars on which assigned regulatory and institutional capacity will really thrive, with accountability and measurable progress being the core yardsticks. On implementation and challenges, they talked about effective implementation, requiring capital building, innovative financial products, and robust monitoring and reporting, amongst many other things that were said. But this is where we get to focus on another sub-theme as we reflect on our broader theme. Still some members outside? Please, all our members outside, please join us inside. We're set to begin the second leg. The first part of this afternoon's technical session will be a presentation on Ghana's Sustainable Finance Roadmap. It will then lead us into IFC SBFN session, where they will give us the roadmap journey and the global lessons. And thereafter, we shall have a panel on the experience sharing on implementation of sustainable finance roadmaps. And then we shall delve into our last important conversation, where we get to hear from key stakeholders, industry reps, and market representatives. That will be how we'll close the day. And then we shall zoom into another session of networking and knowledge sharing. Do we have everybody here? Please show by hand if you're here. Madam Louise Gardner, IFC. Woo. Timothy Ofosu, are you here with us? Tim is here. Mr. Johnny Wa, I saw him outside. Okay, let's see if we have Thomas Esso. Okay. Mr. Sachu Makwabwa, I know he's around. He's upstairs. Oh, you're representing him. Okay. Okay, so with 1:35 being the time, I believe let's zoom straight into the presentation on Ghana's Sustainable Finance Roadmap. Mr. Timothy Ofosu would walk us through from the BOG technical team. Please, let's make him welcome with a round of applause.
Good afternoon, distinguished guests, and I stand on all existing protocols. So today I'm going to delve into Ghana's Sustainable Finance Roadmap. So today's agenda has us dealing with our journey so far, why this matters now, the pillars of the roadmap, ESG integration, climate and nature-related risk management, and financing sustainability. So our journey. So last year, 2025, around May, the management of the Bank of Ghana approved the establishment of a Sustainable Finance Roadmap Committee. So this committee consists of members from the Ministry of Finance, the National Insurance Commission, the National Pension Regulatory Authority, SEC, ICAG, CIB, with support from the IFC and SECO. Now, the main crux of the roadmap is to develop a credible regulatory framework that will guide all regulators on how to address risk, particularly climate risk, and how to transition towards a more sustainable finance world. So prior to today's launch, the committee held a validation workshop where we solicited views from external stakeholders. So we had reps from the Environmental Protection Authority and also reps from the Office of the Minister in charge of Climate Change and Sustainability. So one will ask, why is the sustainable finance roadmap, why does it matter amongst financial sector regulators? So I would like to use an analogy here. So assume financial system is a house, and the house is strengthened by, say, financial stability. So the core pillars of the house, in this case, the pillars of the house are regulators. We have your Bank of Ghana, your MPRA, the Securities and Exchange Commission, and the National Insurance Commission. So the goal here is that these four pillars must stay strong to support this building. The building here is our financial system. So what we are experiencing now is that there's an emerging form of risk that is coming up, particularly climate risk. Now, these risks amplify already existing traditional financial risks. So say a severe weather event, which is a form of climate risk, should occur. It has the potential to threaten the stability of this financial system, thereby bringing the whole financial system into disarray. So that is why management felt it necessary that we come together, align all our efforts, then see how best we can mitigate these risks, and also channel funds towards a more sustainable world. So the roadmap consists of three key pillars, and they are ESG integration, which is pillar 1. Pillar 2 is climate and nature-related risk management, and the third pillar is financing sustainability. So across the pillars, there are certain themes that run across. They include your governance, your capacity building and awareness, monitoring, evaluation and reporting, and international partnership. So we'll spend a few minutes delving into each pillar. So under pillar 1, which is on ESG integration, here we expect, in this case, I speak for regulators, us, that what we want to see is the integration of ESG considerations into the operations of regulated entities. Regulated entities here is broad. It covers all financial institutions, pension houses, savings salons. So all of them sum up to become regulated entities. We want to see that there has been an integration of ESG considerations into the operations of regulated entities. This is to prevent or mitigate financial losses, reputational damage, and adverse impacts. So the key actions here are each regulator shall be required to issue minimum guidelines on addressing sustainability and climate risk. So for Bank of Ghana, we started this journey almost a decade ago. And during that period, we have come up with certain policy documents to guide the industry. So on our part, you have the sustainable banking principles to address issues on sustainability. And you have the climate-related financial risk directive to address issues on climate risk. So we expect that going forward, each regulator will also put in place the necessary frameworks or policies to guide them on these risks. Also, regulated entities are to integrate risk assessment into their operations. Regulated entities are also to introduce tiered ESG due diligence, and regulators to introduce baseline ESG reporting using qualitative and quantitative metrics aligned with IFRS S1 and S2. So in 2024, the Institute of Chartered Accountants Ghana, that is the body mandated to oversee all accounting standards in Ghana, came up with a roadmap on how we are going to implement IFRS S1 and S2. So IFRS S1 and S2 basically means standards on sustainability disclosure, that is S1. And for S2, it refers to standards on climate disclosures. So for most of our entities or regulated entities, we fall under what we call the special public interest entities. So we are going to start disclosing starting somewhere in 2027. So it is on us to make sure that these entities comply with the new regulations as set out by ICAG. And also, regulators are to integrate ESG into prudential supervision. That is in our on-site work and our off-site work. So on pillar 2, which is climate and nature-related risk management, here we expect that the entities come up with policies and frameworks to address this emerging risk, particularly climate risk. So climate risk evolves from two main drivers. We have your physical risk and your transition risk. So the flooding events from yesterday, we can classify it as physical risk because they cause severe damage and at the same time, they cause financial losses. Transition risk, on the other hand, can be described as the cost of society moving towards a low carbon economy. So here, regulated entities boards are to assume explicit oversight of climate-related risk. We want to see the tone set from the board. So every policy or framework that is developed, we expect it to pass through the board first, get its approval, then it's cascaded downwards. Also, regulated entities are to identify material, physical, transition, and liability risk relevant to their activities, and also phase the introduction of climate scenario analysis. So under pillar 3, this will be the catalyst of the sustainable, So under pillar 3, this will be the catalyst of the sustainable finance roadmap. Here we want to see financial flows towards investments that support Ghana's development priorities, including climate resilient infrastructure, climate smart agriculture, renewable energy, affordable housing, and MSMEs. So here the key actions we require from our entities are that boards to approve a medium to long-term sustainable finance strategy outlining priority sectors, risk appetite, and approach to transition activities. And we are also supposed to design and roll out social and sustainability-linked and transition finance products aligned with Ghana's priorities. So you can look at sectors like the agricultural sector, energy, MSMEs, and housing. So it is our hope that with the launch of this roadmap, it marks a new journey for us. With all regulators on board, it is our hope that we keep going to build a more sustainable and resilient economy. Thank you. Please, does anyone have any questions they would like to ask? Okay, thank you very much.
To this end, you are acquitted and discharged. Please, a round of applause for him. And so all is set now for another very important segment of today's engagement. After listening to that presentation, I believe it's important that we hear from IFC SBFN on the roadmap, the journey, and global lessons. Please make welcome from the IFC SBFN team, Louise Gardner.
Good afternoon. I'm just waiting to see if my slides have been set up or whether I should continue. So good afternoon, everyone. It's an absolute pleasure to be with you. I have a few slides that I wanted to share. But I think the most important part of this is to tell you the journey of why a sustainable finance roadmap and what have we learned from other regions. So why is this important for IFC and why are we involved in supporting central banks to develop these types of frameworks? So IFC has been a global standard setter in sustainable finance since the 1990s. So we're a development finance institution. We have a dual mandate. Our job is to do finance, but our job is to have also to have a positive environmental and social impact. So our shareholders, who are the member countries representing the taxpayers, make sure that all of our transactions meet those requirements. In the 1990s, some of our projects came under scrutiny. So these were projects that had perhaps negative social and environmental impacts. We're not always the majority shareholder in the projects that we finance. In fact, we avoid being the majority shareholder. But because we were a high-profile development finance institution, we became the target for the media, NGOs, civil society, for good reason, and we were held accountable. And from that, we have developed environmental and social standards, a foundation of good environmental and social risk management that is absolutely non-negotiable for all the transactions that we enter into. So 30 years later, and IFC's performance standards are embedded in how development finance institutions operate around the world and have been adopted by over 100 commercial financial institutions globally through the Equator Principles. But the journey continues. So environmental and social risk management, we now know from data, from multi-year data, not just from IFC, but in other countries, particularly China, where they've done a great job tracking this. And I'm signaling that because I want to see Africa do a great job tracking this. That managing environmental and social and governance performance reduces risk and improves business outcomes. So IFC has done research on this. Harvard did research on this. This was about 15 years ago. And we could see clear correlations that the businesses, institutions that integrate these principles outperform. And sometimes they outperform in significant ways. China started tracking this from 2014. They started this, the Chinese Banking Regulatory Commission was one of the early regulators to start asking banks to report on their ESG risk in their transactions, their financing of green themes, so we heard about taxonomies, and to link that to non-performing loans and credit risk. And what they have found is multi-year data that confirms the correlation. Green lending has lower credit risk. So we should be jumping up and down and we're absolutely demanding that this should be what we do as business going forward, if this is the evidence. But as you know, this is more complex than just finding out that there's a correlation. There are a number of steps to put in place the enabling environment to support banks to do this in a national context. So that's why I'm here today. So my name is Louise Gardner. I'm a senior operations officer with the IFC. I'm currently the regional lead for advisory services for financial institutions and regulators on sustainable finance for Eastern and Southern Africa. I'm stepping out of my jurisdiction to attend this event because in my previous role, I was Africa coordinator of the Sustainable Banking and Finance Network. So the Sustainable Banking and Finance Network was established by IFC in 2012 at the invitation of 10 countries, including China, who we had been supporting as they started this journey. Nigeria was another founding country, Indonesia, and I think Kenya joined us in 2015. And Bank of Ghana has been a member for a number of years. And The network has now grown to over 70 countries and over 100 institutions, and it is for financial sector regulators, banking associations, and sometimes ministries of finance and capital markets regulators from only emerging markets. We are different to NGFS, the Network for Greening the Financial System, because we only have developing markets and emerging markets. I personally believe NGFS was created because the European countries wanted to join us, and we said no. So we said this is an important community for the emerging markets. So what we've been doing with through SBFN and with members like Bank of Ghana since 2012 is we have been sharing knowledge between countries on how do you develop the national supporting frameworks that can guide banks towards good practices, environmental and social risk management, and then that allows them to access finance from the development finance institutions, from the Green Climate Fund, and to be presenting themselves to global markets as low-risk, resilient, competitive institutions. But very soon, in about 2015, 2016, as we were doing this work, the opportunity side, and we heard in the panel earlier today that the opportunity side is critical. And how do you support banks to access capital markets on sustainable finance, to start issuing sustainability-themed instruments, and using green lending strategies to grow their portfolios and improve the performance of their clients. And so that's what brings us here today. And I think the Bank of Ghana roadmap is an excellent example of the central bank stepping up and playing a leadership role to bring all parts of the financial sector together to have a common vision of how do we create that ecosystem. And I think it's really powerful that that roadmap also embraces other parts of the financial sector, like pension funds, capital markets, etc. So everything is on the right track. So I do have slides, and I've started a story. So I am going to only use the slides that I think are going to be useful to you right now. So I'm going to be flicking through, and I wanted to give you a few highlights and a flavor of what we're seeing in the market in Africa and the trends to look out for as this roadmap moves forward. So first of all, we know that the maturity of the enabling environment is critical. We're seeing a growing number of central banks bringing in climate risk assessment methodologies, guidance on how banks should disclose, and this is increasing the profile of African banks as a place to send climate finance. And we see we have a huge gap in terms of the climate finance required to respond, particularly calculated through countries' nationally determined contributions. These are the frameworks that banks are organizing themselves around. The Sustainable Development Goals give us a framework for impact. The Paris Agreement gives us a common goal for how we want to respond to climate change. The IFC performance standards have created a standard for how you manage environmental and social risk. So there is convergence, and we are all moving in the same direction. Definitions of sustainability. Climate finance has been a big focus, so we're talking the opportunity side. So climate mitigation and adaptation finance has been very popular. We've seen green bonds grow, but the other themes are coming to the fore. Nature finance, blue finance, so water, oceans, circular economy, and pollution abatement. These are critical areas where banks can finance, and we see evidence of the business case emerging very strongly in some of these themes. IFC has developed eligibility criteria and guidance, so you don't have to guess what these things are. You've got resources that define what is nature finance, what is blue, and how to ensure that you prevent greenwashing, as we heard earlier today. And then how does that look from the perspective of an investor? In 2018, IFC and Amundi teamed up to establish the EGO Emerging Green Bond Cornerstone Fund to buy green bonds issued by financial institutions in emerging markets. Sorry, it's a lot of words to put together. And it's been highly successful. And one of the things it did is, because of the way it's structured and it uses IFC approach to risk management, IFC as an anchor, is that we reassured institutional investors in Europe that they were buying lower risk instruments. And it's been a very successful fund. But what you're seeing here is disclosure on the use of proceeds from the bond issuers in those countries. And look to see what's emerging. So the dark green is green building finance. The top, the light green, is renewable energy finance. That is dominating the landscape in terms of where use of proceeds is being focused. But there's so much more in terms of opportunities in our economies, and so much more that we need, including my favorite category in the Chinese catalog, sponge cities. So hands up for those people who know what a sponge city is. Okay, so the last couple of days could have used some sponge city elements. So sponge city, some genius came up with this concept that is anything that allows a city to absorb flooding, right? So permeable roads, pavements, rainwater, wetlands. If you increase the design elements in your city that are spongy, you reduce the impacts of flooding. So in Dar es Salaam, where I'm currently based, every time there's flooding, we get new potholes, and they're constantly having to improve the road surfaces. But the multicolored pie charts are the ones in Mongolia, Chile, and Colombia. And what do those countries have? They have green finance taxonomies that are being used by the financial sector. And so I think one of the key messages that I want to drive home here is we have over 40 national taxonomies globally for defining eligible criteria for green finance. A small fraction are currently effective in actually driving that capital. And the countries that you see here, Mongolia, Chile, and Colombia, with their multicolored pie charts, are the ones that are succeeding in that effort. And the other thing that they have in common is dialogue between the regulators and the banking sector. So I need to wrap this up quite quickly. So I just want to emphasize the fact that we have a growing market for sustainable finance, but very little of that is coming to Africa. We need to significantly raise our game and build the capacity of financial institutions to absorb that capital. We recently conducted a survey of African banks, and we didn't have a comprehensive response. So what I'm about to share you in terms of results is based on 38 banks responding across the region on these questions. Do they have these things in place? Do they have vision and strategy for sustainability, governance and management for sustainability, business model, capacity, ESG and climate risk management, decarbonization, communication and reporting, and data tools? And we now have a good idea of what that looks like in Africa. So these are the countries that responded across Europe, Africa, and Latin America. And we see that African banks are the ones that responded. On average, we're scoring on par with the other regions in terms of the average score for those performances. But in Africa, we were particularly strong on vision and strategy and governance, which is a good thing to hear. And in Africa, sustainable finance has to be tied to social impact. You can't do green without doing social in Africa. Common themes: renewable energy, climate smart agriculture, green buildings, sustainable SME finance, climate adaptation, and nature positive. And I won't go into this in detail, but what it basically says about African banks: a commitment, a vision, governance is looking good, but actually building up the systems, we still need to invest more. And so this is what this roadmap can do. So Bank of Ghana is part of the Sustainable Banking and Finance Network, which is a network of friends helping friends. And we have members all over emerging markets. We're seeing a steady growth in initiatives like the roadmap, where frameworks are being introduced. And it combines both risk management and opportunity. And that brings us to the toolkit that we developed for developing sustainable finance roadmaps. And Bank of Ghana was one of the first to pilot this. I was digging up an email from Damilola in 2022 where I said, hey, I've just met the representative from Bank of Ghana. They want to pilot the toolkit. And so Damilola has been walking that journey with Bank of Ghana ever since. So I just want to say a huge thank you to Dami for that work. It takes time, but it's worth taking the time because you build awareness, you build relationships, and then eventually you have what you had today, which is the launch of a roadmap that everyone can buy into. So what is a sustainable finance roadmap? Provides the country with a holistic, multi-stakeholder framework to jointly define sustainable finance objectives so that we have a shared vision, to identify key opportunities and barriers, and to set out actions and key reforms required to align the financial system with national and global sustainable development priorities. This is a definition not coming from IFC. This came from all of us within the Sustainable Banking Finance Network. And these are the countries that have developed roadmaps. It's not a majority of our members. It's actually pioneering members that have done roadmaps. And what we can tell you is once you have a roadmap, you move fast. So put your seatbelt on. It's going to get fast from here on in. And let me just finish here with how we've been benchmarking sustainable finance enabling frameworks across emerging markets. 3 pillars, and we heard all 3 spoken about today. 1, foundation for environmental and social and governance risk management. 2, assessing and managing climate and nature risk. And 3, financing sustainability. So how do you unlock those opportunities? So that's what your roadmap is for, and we're looking forward to seeing the progress of Ghana. Ghana is already in the advancing category for the Sustainable Banking and Finance Network. Next stage is consolidating. And I started with the lesson in data, the China having tracked. I want to encourage you to make sure that as you move forward, that you track what is happening in terms of ESG and green lending and how is it benefiting banks in terms of resilience and competitiveness. Thank you so much. All right, so we're going to segue to a panel discussion, and if you'll just allow me to orientate myself. So we have a few delegates from Kenya Bankers Association here with us today, and one of them, Bernadette Ngara, who I'd like to invite up to the stage from National Bank of Kenya, has kindly agreed to share with us the journey of Kenya Bankers Association. They, as I mentioned, SBFN is a community of banking associations and regulators. That's what makes us unique. We facilitate the dialogue and collaboration between the public and private sector. This is really important. You may have heard about taxonomies being brought in. One of the reasons why taxonomies often don't get used is the banking sector was not properly consulted in their design. And banks will be the first ones to deploy capital using green finance taxonomies. So we really have a responsibility to ensure dialogue, and this is something that KBA has been leading in the Kenyan market. So thank you so much, Bernadette. You're joining us with 2 hats. So you have the hat of representing Kenya Bankers Association. So that's how you'll be engaging with us now. You also have a role at the National Bank of Kenya, and I'd like you to elaborate a little bit on that role. And what we won't go into, but I'll just let the audience know that she's a very inspiring regenerative agriculture farmer in her own right. And right now, the IFC team specializing in regenerative agriculture are scrambling to learn from Bernadette's wisdom. So Bernadette, please, can you just provide an introduction to yourself, your role, and then KBA, and the journey that KBA has walked in terms of sustainable finance since 2015. Thank you.
Thank you, Louise, and good afternoon, everyone. Thanks for having me. First, I want to congratulate the Bank of Ghana for the launch of the roadmap this morning. And we're very excited as KBA. I would refer to KBA, Kenya Bankers Association, going forward as KBA to make the conversation shorter. So we at KBA, I sit in KBA, the team that is working on together we are IFC, that is working on the roadmap, which we are going to launch in November this year. But on top of that, I also sit in KBA as the chair of communication and communication committee for the banks. We have 46 banks in Kenya, so I represent them at KBA. We have also Shalin, if you could wave, please. Shalin is working with KBA in the sustainability division. She's a catalyst in her own right, does quite a bit of work with other banks in the industry. So if I may now move away from KBA. I'm the Director of Marketing and Sustainability at National Bank of Kenya, which is one of the commercial banks represented by KBA in the market among the 46 banks. It's a Tier 2 bank and a subsidiary of Access Bank PLC. So that would be what I would say for now, but in this moment, I am KBA. Thank you.
Thank you so much. All right, so KBA has also been going through its own roadmap development process over the last year. We've had the privilege of supporting you on that, but it's been driven by KBA, bringing together the regulators. It's endorsed by the Central Bank of Kenya. Can you tell me why are sustainable finance roadmaps so important?
Wow, I think that has been overemphasized this morning, but I'll give it my perspective from the Kenyan context. First of all, if you look at banks all over the country in Kenya, if we were not to be together in following some certain principles or certain ethos around how we do things, everybody would be doing their own thing. We'll be all over the place. So the roadmap then matters because it moves from being aspirational to becoming part of everyday banking. It helps banks reduce regulatory uncertainty. If you see from a regulator perspective, and I don't know whether the regulator is in the room, you'll be able to govern or to put everybody in a row, sort of to put them back into track because you're using some document that is governing everybody. You create common understanding around the ESG, climate expectations as well. You strengthen, of course, the stability of the financial institutions in the market, and of course, attract climate-aligned investment. That's what we have seen, and that's what our roadmap has, with the help of IFC, as you know, Louise. We have embedded that, the pillars, the principles in it, so that then we are a stronger team together, the 46 banks, to face the market. That's what I would see the roadmap as, helping the banks. And that was alluded this morning by the ministry and as well as the Bank of Ghana.
Great, thank you. And I think it's also important to note that one of the key characteristics, even though we have a toolkit that was developed developed by actually a former member from Mongolia Bankers Association. So they were one of the first countries to have a roadmap, and the person who led that work actually authored the toolkit that we use to guide members. So our methodology for developing a sustainable finance roadmap is developed by members and using member case studies. And what's really important is there is no one size fits all. The roadmap is tailored to where your country is at its current development stage of sustainable finance and what the national priorities are and what is decided through the process of engaging the different stakeholders. So the public-private dialogue involving, so you had the capital markets regulator, the pension regulator very involved, if I remember correctly, and
NSC.
Sorry, and
Nairobi Stock Exchange.
Nairobi Stock Exchange. And this is critical because the roadmap empowers everyone and says this is what will be happening in your particular role. I can tell you that in South Africa, there was two things that really helped in terms of the national roadmap, which was called a technical paper on financing a sustainable economy. That was published in 2021. They've published the draft in 2020 while we were all in lockdown for COVID. So we noticed that during COVID, all the green finance initiatives continued because the people were so serious about them. But the South Africa roadmap did two things. One, it stopped the debate on what is sustainable finance. It actually helped a common definition for the country. And second, it stopped the questions that people were asking, well, what am I supposed to do as the stock exchange? What am I supposed to do as the central bank? And is everyone okay with me moving ahead with that piece? So I think it's great that KBA has convened that discussion. So now that you're getting ready to launch the roadmap, which I think is targeted for November this year, can you tell us what's in it? What did Kenya choose to put in its roadmap?
Okay, we developed the roadmap with the funding from WWF and of course a lot of technical support from IFC, and they continue to hold us. We had representatives in the committee. We still do have, not had, the committee still continues. We have tier 1 and tier 2 banks represented in it. We have stakeholders from the market, as Louise has alluded, and we were guided by 4 pillars. The 4 pillars, the first one being climate and nature risk management. This is basically the climate and nature risks, showing the financial risk around that. They integrate climate and nature risks, address both physical and transitional risks, and of course, protect portfolio. The second, ESG integration. This should be part of every business decision, as you know, so far, not a separate department. It's embedded in what we do, what we think, how we do things with our customers and with ourselves as an organization, as a bank, as an industry. The third was the financial sustainability. So this is the bridge, a gap between sustainability ambitions and the actual financing. I believe I'm talking to bankers, so you understand that conversation over there. The last one is emerging risks or issues. These remain, the sustainable finance is constantly evolving, as you know. You cannot be dealing with issues of 2 years ago. They have moved on. I'm sure Ghana, with the story of last night or 2 nights ago, the rain started in the night, isn't it? And has been going on, but yesterday was like the top of it all. We saw it all over the news even before we arrived. But if you look at emerging issues, I don't think you've had that kind of flooding in a while. You may be having flooding every year, but not that severe. I don't think so. So we can't compare this flooding of yesterday with the flooding of 2023 or 2021. We have to keep evolving and understanding the environment and the issues around that. So that's why the 4th pillar, the emerging issues, the nature-related risks, the MSME financial inclusion, the carbon markets, obviously, the transitional finance, and evolving global standards. That was a pillar. It was very important that it's put as a pillar, not put together with another, because it just underscores the importance of the involvement in this sector of ESG.
Thank you so much. So that compares very well with what's being done in other countries. And then I think one of the magical elements about roadmaps is the co-creation. So can you talk a little bit about why was that so important?
Okay, maybe I start from the back and say, at the moment we are in the validation stage, and having created, together with the help of IFC, the roadmap, you need everybody in the bus. You cannot leave some stakeholders who are important to the journey out. So we have, at the moment, the validation, we are at the validation stage where we have people like the Institute of Accountants, I don't know what you call it here, in Kenya is ISPAC. We have the National Treasury, and I was very encouraged to see the government on stage this morning. We have other government institutions, a lot of them, just like I also had, the Ghana team has that. This builds trust and ownership. It helps the roadmap not be a hindrance. There is ownership from a top sort of top institutions. I was very encouraged to see the central bank, the Bank of Ghana here, being the one launching and driving the initiative. That's amazing. It strengthens, of course, the technical credibility, and aligns banking with national development and the priorities of the government. So that, having said that, we move forward, and KBA, that is the Kenya Bankers Association, was very wise in the formation of the team to start this, and with the technical advice from IFC, banks were involved, the big boys and the middle boys, because if you leave the big boys out, it's not going anywhere. They're the ones who own more customers than anybody in the market, and all that. So there was that co-creation of the team, and it's integrated technical and the people who are doing work daily to come in for almost a week, and constant other meetings, and a lot of, may I call it, for a lack of another word, soul searching to get to where we are today. And I was very encouraged with the panel that was here before lunch to hear that they started in 2013. That was a journey on its own. I think quite something. So we carried everybody in the bus. The bus is still moving, and we hope to deliver everybody at one stop, not different stops. So a lot of consultations, a lot of understanding of everybody's position and where they are at, and truly moving them seamlessly towards where we want them to go. So I really, if you allow me to say this, Louise, I really would like to, at this point, to thank IFC for their patience. It hasn't been an easy job in terms of getting everybody together to go and see the vision and actually buy it and move. That has been a journey that IFC has done with so much grace. So well done.
Thank you so much, Bernadette. And I think Dami Lowella and I think I can speak for Dami, we love this work. And we love that at a certain point in every country's journey, there are people who get it. Often it's the central bank governor who gets it and then says, we need a roadmap. Or it's champions within the organization that get it and start building it. Or it is the banks. And in Kenya in particular, it was some very, very special people in Kenya that were driving this through the KBA.
Also, if you look at the Kenyan landscape, KBA has its own voice in the market. Yeah. So the way we have central bank here say something, KBA leads in a lot of initiatives this way, And banks, because they own KBA, it's their association, they tend to really support KBA, and they have a very well developed team and forward-looking, with the help of a lot of partners and collaboration to drive the initiatives. So again, also the strength of KB in the market has also helped carry on everybody. All the 46 banks are responsive and ready to and raving to go.
Thank you, Bernadette. And I just want to acknowledge, we have a former colleague. The reason why I was a little bit emotional, we have a former colleague, Nuru Mugambi, who passed on several years ago, who led the work in Kenya from 2015 onwards. So very, very special work being done. So we're at an interesting time. The world is changing very rapidly. Climate change is affecting countries. We've built up the capacity of banks on environmental and social risk management. We now all know a little bit more about how to do climate risk assessment. But we also have a new frontier of opportunities ahead of us. So what would be, as a closing question, what do you see as the future? What are the exciting trends ahead of us on our path?
We have a lot of opportunities in this journey. If you look at it from a point of view of banks developing new products, new green products, sustainability-linked lending, which banks have not embraced completely. The roadmap will help that in that space. Climate adaptation finance, again, that's something that banks, we talk, but we need now to get into the space of actually innovating and actually having products that the sectors like MSME can transition into, and that most of in the Kenyan market, the market is mainly MSME. So if banks then embrace this, and they will, because they are all represented in making it, the market will respond, because all of them will have one voice. The other thing is we'll be able, as Africa, as a nation, as people who are in this sector, finance sector, we'll be able to attract investors, just like it was said in the morning, without repeating too much. We'll have a competitive advantage. Compliance will not be an issue that is varying from different banks. It will be, everybody will know what's not compliant and not what's compliant. The digital innovation will kick in. There are lots of opportunities. What I see as a challenge, and I think we need, even as we launch, even as Ghana moves forward, I look at the limited availability and the quality of ESG and climate data, and I worry. So again, those gaps, the climate gaps with financial institutions again come in. So we just need to be aware of the challenges and really like cushion ourselves as industries, financial industry, cushion ourselves and be woke, so to speak, and deal with them. Then again, harmonizing the standards across the Africa markets, maybe a customer is trading across. That's again, it will be really nice if more markets in Africa can embrace, like Ghana has shown us this morning, can embrace these roadmaps and move together. It will make the African continent so much easier. Having said that, I think Ghana has set the stage. Peer learning is a thing. You'll see more people come to your country, and I hope the same grace and accommodation you've given us will be given to them. A lot of collaboration is needed to make sure that we are driving from the same script, so to speak. IFC, you need to spread your wings to more African countries, offer more technical support so that we are, as an African continent, we are moving together. And that would be my challenge, maybe back to you as IFC, to just help us move together. But before, and very quickly, I see the MC has woken up. Before we went into the roadmap, I just want to talk to the principles that helped guide us as KBA. So we had the strategic alignment, I'll just mention them. The responsible business practices, the management of environment and social risk, resource efficiency and operational sustainability, financial inclusion and sustainable development, and collaboration and capacity building. Those were guiding factors to getting to the roadmap. And I had also the Ghana team had their own. So very well done once again, and thank you for having us.
Thank you, Bernadette. So thank you for the opportunity to share, and we look forward to hosting Ghana in other similar events in other countries and growing Africa together. Thank you.
And before we go, I think on behalf of KBA, that is Kenya Bankers Association, you're all welcome in November to support us as we launch our roadmap. Welcome, and as we say in Kenya, karibuni.
Ladies and gentlemen, a round of applause for Lois Gardner and Bernadette. I hope I got the name correct. Bernadette, okay. And so that has been a beautiful walk, showing us the roadmap, the journey, and global lessons so far. What is set down for us, ladies and gentlemen, is what implementation will require. Shortly, we get to see the panel and we hear from them. But I see most of you are struggling to stay awake, like the guy over there. He's seen God. Can we do something just to warm up a little? It's a little cold in here. Please rise, please rise, please rise, please rise. You sure it's hot? You sure? Hey, Charlie, open your tramic palogo fio. Back. Anyway, I'm boy, how no travel local. All right, everybody. So there's something small we're going to do to exercise our body. Get up your feet. 1, 2. Get up your feet. It's dancing time. Get up your feet. It's high life time. Raise your hand and stamp your feet. Oh, please. Raise your hand and stamp your feet. Everybody, raise your hand and stamp your feet. For the last time, raise your hand and stamp your feet. Go down low, go down low, go down low. Go. So let's go. Are you ready? Rise up your feet. It's dancing time. Stand on your feet. It's high life time. Raise your hand and stamp your feet and go down low, go down low, go down low, go down low. Stand up your feet. It's dancing time. Stand up your feet. It's high life time. Raise your hand and stamp your feet and go down low, go down low, go down low. Put your hands together for yourselves. Ladies and gentlemen, I give it to you. Blokom. Take it away. Please put your hands together. Thank you very, very much. And so for those of you who are visiting Ghana, this is how Ghanaians show their appreciation for this great gesture, from the grasslands of the savannah to the coast of the south. All the dance forms that have come forth just show jubilation and celebration. We now want to go into a last conversation where we get to hear from stakeholders on what implementation will truly require. Moderating this session is the IFC Senior Environmental Specialist, I beg your pardon. Make welcome Damilola Sobo Smith. She's joined by the Chamber of Corporate Trustees Representative Thomas Esso, from the Ghana Association of Banks, the CEO, Mr. John Ewa, and from the Ghana Association of Industries, or Association of Ghana Industries, I beg your pardon, the CEO, Mr. Setu Makwaba, is represented by Mr. Roxon Dogbega. Is that? Oh. Mr. Eric Defo, I beg your pardon, please. Madam Moderator. No.
Thank you. And good afternoon again, everyone. I'm very excited to be here. It's been a journey, and I'm very excited that we are here today. So, distinguished ladies and gentlemen, we're here because we are launching the Ghana Sustainable Finance Roadmap. And as we've heard, this roadmap really presents a coordinated framework based on 3 pillars Luis just mentioned. Number 1, integrating environmental, social, and governance considerations into how financial institutions are making business decisions. Number 2, strengthening climate and nature risk management. And number 3, how do we mobilize financing towards sustainable development? We've talked a lot today about the framework, but the real test of it all is the implementation. And today's panel is really going to be about that. How do we go from a roadmap to successful implementation? How do we really start to change the trajectory of how financiers are doing business? So this session is very important, and really we save the best for last. So today, joining me, as already mentioned, is the CEO of the Ghana Association of Bankers, Mr. John Owa, the CEO of the Association of Ghana Industries, Mr. Eric Kiman Defo, and the representative for, Mr. Eric Kiman Defo is the representative for the CEO, and then the CEO of the Chamber of Corporate Trustees, Mr. Seth Tum Akwapo. So thank you again for joining us today. And please, apologies if I messed up your name. I am your sister from Nigeria, so please, apologies in advance. Okay, so what I want to do, first of all, as we start, is to really start the discussion with framing. When we're talking about moving this roadmap to reality. So I'd like to, first of all, frame the discussion and begin by asking you all for your initial reactions and reflections on what is required as we move the roadmap into implementation. So from the banking sector, what really needs to change as we start to embed sustainability into our lending and risk management decisions? From an industry perspective, what are the changes that businesses need to make to be able to really remain competitive while also reaching these objectives? And then from an institutional investor's perspective, how do we start to really integrate sustainability into investment decisions? So I'll start with Mr. John, your initial thoughts on how we move.
Yeah, thank you very much. I believe moving forward, just like we started with the rollout of the sustainable banking principles, going through the sustainable finance roadmap would need the collaboration of all key stakeholders. So what we are doing here today is a very good starting point. From experience, we observed during the rollout of the sustainable banking principle a certain tendency of over-focusing on the banking sector. But it takes all the parties within the should I say, the entire environment to make it succeed. So the danger of over-focusing on the banking sector is you have a very good financial system that understands why sustainability is important. First, it's good for our business as banks, because that's where the world is moving to. We cannot be left behind. But banks work with entities, we work with individuals, we work with body corporates. If you do not get the body corporates to that same level of understanding, and sustainability comes with frameworks, it comes with requirements, it becomes a bank becoming troublesome because the business entity believes that is the bank that is overlayering maybe a lending decision with several, bring this requirement, bring that paper, so working together is a key success indicator if the roadmap is to succeed. And again, we cannot do things on paper, and on the ground, what it takes to make it work is missing. And here I'm talking about capacity. You find that Ghana, we like to talk about nice things. Sustainability, taxonomy, green finance, taxonomy, there's this. But if you ask the business corporates that we deal with, how many companies have the capacity to even measure their environmental footprint, or have taken the step of measuring the environmental footprint, you will find that on the ground there is nothing to touch. So are we ticking boxes, or we want to get things on the ground actually implemented to get this off the ground and also working as designed? So it doesn't become one of the nice documents we have, but on the ground there is nothing much to see. Thank you.
Thank you for that, sir. And I think that's a very good segue into industry, because one of the things we did here when we initially launched the Ghana Sustainable Banking Principles was the bank saying our real sector businesses, they're asking us why we're not EPA. Why is the bank asking us these EPA questions? And they were coming across as troublesome. So really, how do we really understand each other, work together? And so I guess I'll hand it over to AGI also for their comment.
Yeah, thank you very much. I'd like to take off from where Mr. Ewa left off. The reality is that climate issues and ESG have become a global phenomenon, and everybody has to either adopt the measures or adapt to them. So industry has started. I mean, AGI, we have an energy service center that started off by helping businesses to transist from heavy energy consumption into renewables. And I'm happy that the central bank as a regulator has taken the initiative to work on this, because the financial institutions who we deal with to fund our projects, once they go through the ESG compliance requirements, they will understand better the challenges that industry faces. One of the challenges in implementation that I can straight away talk of is the transitioning. Usually industries are already operating with their capital equipment and all that, and it is not easy to retool. Even if you want to do it, it comes with cost. How does industry fund the transition? Are the banks ready to support? And that is why I feel that the central bank having taken initiative to do this will help, because one of the ways they can do it is to compel the banks to maybe apply a certain portion of their credit portfolios to these green transitioning and energy, environmental, social governance issues. You would also observe that in Ghana, about 85% of our economy runs on SME. And they are the ones who don't really have resources to manage this kind of transition. So we should be deliberate in our actions to make sure that the banks meet us halfway. If they've gone through the process of ESG and they understand it, they should be able to apply some resources to support industry also to transist. So that is what I would say for my opening remarks. But it's a good initiative, And we've already started implementing, especially some of the industries that are exporting. There are requirements from the importing countries that you comply with certain ESG procedures, and we are implementing them.
Thank you. Thank you so much, sir. And from a trustee's point of view, I would your initial comments on really how do we move ahead, how we ensuring that even as the banks are requiring these ESG requirements, how we also looking at the pension funds and institutional investors and their need to integrate sustainability into how they make decisions.
Thank you very much. And for proper introduction, my name is Thomas Kwesi Esu. And so I'm the Executive Secretary for Chamber of Corporate Trustees. So I represent the pensions market players, the industry. So I think this is a very good initiative. And I've had a lot of conversation with DFIs, and the question they always ask is how are we integrating ESG into our investments? And sometimes they are even looking at how our investment guidelines even capture ESG principle and then sustainability issues. And I must say that pension sector is a bit complex, because if I say it's a bit complex, you should understand that all of us here are workers who also contribute to pension funds. And when it's time for your retirement, you are ready to take your money, your benefits. You know, no excuses can dissuade you from taking your benefit when you're going to retirement. So the complexity is that as you're investing the contributions of the workers, we are looking at the safety of those investments also, so that at the time of investment, at the time of their retirement, they can always have their money. But we also recognize the need that there's always the need for sustainable investments, because why do we look at that also? Sustainability really, or sustainable investment at the end of the day, will impact the same workers who are contributing to the pension fund schemes. And again, if it impacts the real sector of the economy, i.e. providing more employment to the unemployed, then it means that there is going to be more contributions from those workers into the pension schemes. And so I think that is a very good initiative, and I'm particularly happy that our regulator was part of drawing up this framework for all of us, because then I also expect that the various regulations, the various guidelines in the pension sector will also capture some of these principles, which will enable us to invest sustainability. But the other side is that we are capital providers, and we want to do the investment. So we need those who bring those investments or those assets that have those features of sustainable investment. Because if they bring it, that is what we are able to invest in. But if you don't have those investments, then it becomes difficult for us to invest. So for my initial comments, I would say that it's a very good, how do you call it, roadmap initiative that we all have now. And I believe that everybody in this room, with the experiences of yesterday and 3 days ago, agree that we all need to invest. And for us from the pension industry, where the funds are pensions capital, then it means that we become one of the most important capital suppliers that can also engineer this sustainable investment. Thank you.
Thank you, sir. I think in all the initial comments you've made, I think we've already started to hash out some of the challenges that might exist as we move the roadmap forward. But I'd like to look beyond the challenges and even start to maybe think about how do we move towards readiness, right? So how are we addressing these challenges, moving towards readiness, and then really starting to transition our industries. So I'll again use this theme to sort of ask a round of questions, again around this. How do we transition from an industry perspective? I'll start with you, sir. Looking at from AGI, what is it that what is it that the industries need in terms of transitioning? What type of supports and what are the implications of this type of supports?
Well, there are two parts to the transitioning. One is the operational part of it. I mean, if you have governance structures that compel you to modify your processes to be environmentally friendly and have positive social impacts, then you started on one side already. The other side actually is retooling. You have an industry that's already set up. has this capital equipment they're producing. Some they have set up maybe not too long ago, and therefore policy would guide what they do, because you need to have a period of time to either amortize your capital investments or to source new equipment to be able to operate efficiently and in a green manner. Where is that capital coming from? The banks are now working towards accessing green funds themselves. So we can't be ahead of them. They have to be positioned in such a way that they come in with us, give us concessionary financing, because if I have to change my power sources from the traditional grid to renewables, even if I bring in the renewables at zero tax rates or duty rates, I still have to finance the capital cost. And at what rate? I can't borrow at 12, 15% to just do that transition. Most of the benefits tend to be more qualitative than quantitative. So if I do a quantitative assessment of my capital outlay and the returns to the bottom line, it may not be attractive. So there should be a way that the financial institutions come in to support, have a long-term view of the recovery and the benefits. There's a cost-benefit analysis that must be done. And I think that the central bank or most of the regulatory institutions have a core role to play in this. If we are intentional about the process, we can make funds available even for consultancy in being able to assess what the industries need and then making available concessionary funding for them to do the transition. So that is a clear roadmap that we can adopt. If we leave the industries on their own, like I said, the majority of the businesses are in the SME segment, and these are not priorities for them. So if we want to be successful at this, then we should be deliberate in our plan to support SMEs to transition and maybe help them in doing that. We can't leave them on their own.
Thank you, sir. And I think seamlessly I'll come to the banks, because your clients are telling you that they need support in transitioning. And so maybe you can, write on that and just really tell us how is it that, the financial sector, the banks, being led with the Bank of Ghana, the Ghana Sustainable Banking Principles, how is it that you're supporting the industries in this transition?
Thank you. As I said in my introductory remarks, the banks are ahead of the curve when it comes to preparation and adaptation of environmental measures. Where we are moving to is moving away from making it a compliance requirement to having it as part and parcel of our everyday life. That we believe will take some time, but again, it takes two to tango. A businessman is telling me a need more or less like a concessionary arrangement in order to transition from where they are to where they are going. Elsewhere, where ESG has taken deep root, a business that is able to transition is able to sell its products at a premium. If your target market for your product is in Ghana and already purchasing power is weak, and there's a product, there's no local, more or less, pressure for green products, and there is regulatory requirement or a country requirement to move green, for which reason you are being asked to move. And the bank is being asked to put depositors' money at risk to fund that arrangement. Where is the convergence point where the bank lends with a view to recover in the future, and where the businessman also invests knowing that there is market that is willing to pay perhaps a little premium for the product? So it's not a paperwork issue. It is a practical, everyday, mechanical issue, which perhaps as part of running this roadmap, we will come to agree on what it is that maybe as a country, a process that can be put in place to help with the migration or transition, and also to help with the banks to support these businesses. If you pick the average lending tenor for banks or the loan portfolio for the industry, you're talking about 3 years. What he's talking about is talking about maybe an intangible investment that may take several years to recover, which means a bank should be able to go in and say, I'm giving you a moratorium of 2-3 years whilst you go through this transition. When you are ready and you are market ready, your products are for the market, and the market is also accepting this premium product because of the background where they are coming from, and the bank will then begin understanding that, oh, the recovery is along the line. But where lies the deposit base to fund that lending? Because we don't have that long dated instruments in the country. So that is where the bank's ability to tap into this green capital is important. As it is now, even for banks that have signed a few arrangements on green finance funding sources, finding the other leg, which is the bankable green project, has become a burden because it's difficult for them to make the market and the business case to make it worth the banks well, because of, again, is the depositors' money that we are putting at risk. So it's not a quick fix in terms of from the bank's perspective because of where we are coming from, highly regulated. But there are little measures that in our view can be taken. Example being, I know that my supervisory governor has just arrived, that if a bank establishes an exposure in green finance, maybe a different capital charge, so that a bank knows that there is some benefit along the way if I, exert my exposure towards green. I'm going to save, even if I don't get the benefit of my profitability immediately. Its capital consumption, measure in my capital allocation is minimized, and that because of that, a bank may go in. So we need all these bits and pockets to work together for us to support our business community. And also for the pension funds, as my brother talked about, if banks are calling for long-dated funds and banks say we are ready, if you go to a bank, it's not the existence of an ESG department, no. It is from origination to recovery. Every end of it must be compliant. So if a bank says I'm compliant and AGI says our people are also compliant, and trustees say, oh, our pension money is also available, then we have a working mechanism. But how do we work together in sync? These three key actors or key stakeholders within this, I believe that is where the challenge of all of us working together to find a common ground on.
Thank you for that. It sounds. I think you also said it's about the idea of bankable green products. Really looking for that. So it's really chicken and egg. I don't know if you have any other thing to add to this, because we would like to sort of break that chicken and egg. Who starts first? How can you transition?
I think all of this will, in the first place, depends on how we also sensitize the pension market players. Because don't forget that at this time, if not for the DDP and recent development where interest rates on fixed income have gone down, then they were just happy or were happy doing fixed income investments. Now, if you want to transit into green bankable projects, then as we are understanding, then it means that the returns that we expect will not be at the commercial level. It's going to be a reduced returns. At the end of the day also, you are looking at a longer tenor provision of capital for those projects, because those projects will need a very long, longer term capital, which the banks maybe cannot provide for that stage. But pension funds are also seen as patient capital. So I think, one, we need to sensitize the markets for them to understand that if you're doing green projects, then the expectations of returns is not going to be as a commercial return. Secondly, also, perhaps we need review of the regulations, especially in the investment guidelines, to actually capture some of those assets in the investment guidelines. Even if you have those assets captured, then where are those suppliers of those investment assets for the pension funds also to invest in? Let me say that in a lot of discussions, we've always explored how our investment could really impact the economy and the society. But you look around, you don't find any investment that is structured in that form. And so then you are just tied up for fixed income and then also equities and maybe some Ps. So I think sensitization, review of the regulations, and also provision of those bankable green projects for the pension funds, structured in the mode that pension funds can also invest in. And I think that is how we can also transition from here.
Thank you. I'm going to pick up on the last thing you were talking about, about sensitization, because really, I think these discussions have really been harboring. We've been speaking around the idea of capacity building and also collaboration. And I think that we require a coordinated effort in capacity building and collaboration to really move this forward and accelerate the progress of the roadmap implementation. So I'm going to start with the banking sector to really ask, how can the banks really support their clients on their sustainability journey rather than just simply imposing requirements? Because sometimes for the industries, it does seem like if before you get our money, you must do ABC. But how do we really develop that capacity and move them from just a checkbox exercise to really starting to integrate it into their business?
Yeah, very good question. And that is exactly what the sustainable banking principle really pushed the banks into. So even at the association level, IFC, you are aware that we've worked with IFC in some programs helping the business community in building their capacity in this field of sustainability. We've worked with GIZ, we've done with a lot of the other development partners. In fact, we've even gone ahead of preparing businesses to be ESG compliant and then map them to our member banks. We did that about 40 or so companies last year. We mapped them directly for lending and tapping into the available green finance that the banks already have access to. So that is the way to go, is not to sit and get and make it a requirement of the business community. It is your business to also support them. Of course, it comes at time constraints and also at an extended cost. And to what extent would a bank overburden its operating arrangement with workshops and capacity building and generating ESG reports for the businesses that they are going to lend to? So we need the system to have a way of also enabling the banks. 2 years ago at the association, we did a paper that was calling for support to enable us now move away from the over focus on the banks. Because if you pick the banks now and in our engagement, they are not up there, but they are very much, the understanding is there. They know what to ask for. But the person you are asking that or making that demand on, you need to also get the person to that level of understanding. Yeah. And that is where we have moved away from making it a requirement to working with them. We've done workshops, we've done a lot of seminars, but beyond that, who gets the work done? Sometimes it may call for getting some form of a consultant to help them to draft some may just be a requirement to change operating procedures, and then they are okay. But who does that? A bank that is going to lend to you is writing your operating procedures. If the facility goes bad, who is responsible? So we need to know where responsibilities begin and end. We can support, but we need the ecosystem to be ready. But as to whether the banks are armchair waiting for green finance to happen, that is not the approach we have taken. Because, as I said, it is good for our business. We know that over time, even before people deposit money into your bank, they may be checking, your compliance with ESG. Investment. We have already seen, and I've heard a story of a financial institution that was looking for capital, and their head office building alone was enough to push an investor away because it was not, proper environmentally friendly. Very exposed to a lot of bricks and the like. So it's not just for compliance. It is very good for our business. Yeah. But to making it good for our business means that we need the counterparties to also be ready. Yeah. But we cannot do the job and everything alone on our side. We know the regulator is doing something. We need the fiscal, the the government, you also come to the table. We worked with them in the development of the green finance taxonomy. It's a way of showing that we are part and parcel of the transition. So as for the banks, I do not think that the focus should be on us at all in terms of whether we want or we do not, because that is going to be our business. It's getting the other end also, drawn to the table to the same level of understanding and the support that end also needs because of the potential cost implications.
Thank you. Mr. Eric, I see you're smiling. I think you have a response to that because the banks have said that they're playing their part, they're doing their role, and they'll continue to do that. So really, where does AGI come in, and how do you support the industry in really, particularly SMEs, because you have mentioned the SMEs as needing that help. So how can AGI support?
I was smiling because my brother, Mr. Wa, was struggling to defend the banks. And the banks tend to be an intermediary between business and then their regulator. And I would like to put the responsibility at the doorsteps of the regulator. The regulator has the capacity to decide deliberately what he wants to do to support business, particularly the real sector in the economy. The reason why I'm focusing on the regulator is that we have been successful at bringing some of our indices down. Inflation has come down, interest rates have come down, exchange rates have come down and are a bit stable around a certain point. But it came at a cost. And to sustain it is a real sector that must take up to be able to sustain these indices. Otherwise, you continue to treat the liquidity, continue to take monetary actions to maintain this thing, which is not the best way to do it. Now, if we identify that ESG implementation in industry can boost growth in that industry, we must be able to spend money to achieve that. The commercial banks are selling depositors' funds, and therefore, if you ask them to give you the money at a lower rate, they will complain. But look at how much we spend treating liquidity. We'll spend much less than that subsidizing interest rates for green or ESG application. So we must be deliberate, and it has long-term benefits, because if our cost of production goes down, we're operating more efficiently, using less energy, there's proper governance procedures in the SMEs, the environmental issues are well dealt with, social intervention programs are being promoted within their community. There's a lot of qualitative benefit. And once we are able to do that, our cost of production will go down. It will make us more competitive in the sub-region and even internationally. And at the end of the day, the benefit still comes to the country. Everybody will benefit. Once consumption goes up and it's at a cheaper rate, people get more value for the money they spend. Because of the continuous turnover of consumption, the tax revenue will also increase. So if you do a critical analysis of the situation, there's a long-term benefit if we spend a certain amount of money now to treat this so that we can transition very quickly. I mean, I was looking at the data 2 days ago, and with energy, electricity, we've had to spend, in fact, about 946% growth in what we were doing in 2024. Oh. And what was the reason? Gas wasn't available, so we're buying heavy fuel oils to support the thermal plants. What could we have done with, renewables? We would not have had to spend that much money. So let's look at it holistically, and let's be deliberate in the action. It's happened in other places before. I mean, if you look at the Korean model, if you look at US, even when they suffered the meltdown in 2008, there were deliberate actions. The companies that were employing heavily, the government looked at layoffs and said, no, we can't allow these companies to collapse. So they gave them highly concessionary facilities with recovery plans. They recovered, they paid back. Why can't we do that? Okay, let's back end the taxation and other things for companies that will transition to green. And then after they've stabilized and are making good returns, you take your money back. It's not, it shouldn't be too difficult to do, but the central bank should be the institution to take that decision, because they have a responsibility to stabilize the economy, maintain all these indices, and this is one of the measures. Once the real sector picks up efficiently, you see the returns that will come. So industry is ready, but we need the support.
Thank you. So the banks are ready, the industry is ready, and there's been a call to action to the Bank of Ghana. But I also like to hear from the Chamber of Corporate Trustees really how you see investors really driving particularly better governance, transparency, and sustainability performance really.
All right. So when it comes to the pension funds also, we think we are also ready. Then what is left to make us to achieve the reality? Then we are looking at the ecosystem coordination also, because we've heard a lot of things where people want to tap into pension funds for projects, but at the end of the day, they don't know how to get the pension funds, because it's not just like you go to the bank, apply for a loan, and you're going to get a loan. Pension funds investment or asset must be in a certain format with certain features, and that is the features that we are allowed by the law to invest in. So I believe that if we have ecosystem coordination, where we all come to the team, maybe AGI, even the banks, and even those who are trying to promote venture capital, and we have the discussion, then we know how to put those bankable projects into investable assets for the pension fund so that we can not go in. One thing that will always be at the back of pension fund investors, as we said, is governance structures. Because don't forget that we are fiduciaries and we are responsible for the monies that everybody's money, everybody's contribution that come to us. And at the end of the day, we need to account to the members of that. And therefore, you're also being careful not to put the funds into investments. That, at the end of the day, if it doesn't work well, then you have to go and explain to these members. So I think ecosystem coordination between the regulators, between the players, between those who need the capital, between the banks and all of us can help to also accelerate how pension funds will also help and invest in green projects.
Thank you, sir. And I will have just one final round, 1 minute, your thoughts of if you could identify one priority action that should happen over the next 12 months in terms of moving the Ghana Sustainable Finance Roadmap forward, what would it be? I would start with you, sir.
So one action that I think we can do to move it forward is to bring all the players, the regulators, those who need the capital suppliers, all of us together at a table. I don't know whether it could be a working group, it could be a committee or whatever it is, but somebody also needs to anchor this. I don't know whether it will be Bank of Ghana or Ministry of Finance, because I was particularly happy when the governor said that even the Ministry of Finance has incentives for businesses who want to do green businesses. And I think that that will also be very fundamental to how the conversation will be had. So if you can get, I don't know whether it should be a working group, a committee, to bring the ecosystem partners all together to one table to discuss this process and how to even tap into pension funds to help finance some of these projects. I think that will also help us a lot. So let's have a working group somehow. Thank you.
Thank you, sir. Mr. Eri.
Yes, I think that the banks by now know their clients. And once they are also now getting well versed in ESG, they should know those who are leaving the biggest brown footprints. So what we can do, if you're starting a new business and you want to go green, it's not that difficult. But the transitioning of the existing businesses to green is where the challenge is. So we can start. I mean, so we talked about some 40 companies that have been supported over the period. Last year. why can't we grow that to about 500 or 1,000 companies? So let's be deliberate in choosing those whose operations are most harmful to the environment. Let's raise some money in assessing their needs in the first place, some consultancy in being able to deep dive into the operations and looking at what they need to change, whether it's tooling or governance structures. Let's help them to come up to, let's treat it as projects so that the bank assists the businesses to develop bankable projects, green bankable projects, and then they go and look for the funds for them. That cost, who really bears it, is where I think that some deliberate funding should be made available with the assistance of the central bank or maybe central government. But I know central government will not like to hear this because of its challenges. So the central bank can look at that. And then I'm also happy that they have taken the initiative. So they must make sure that the project is successful. And then we will be able to make progress going forward.
Thank you. Mr. Joe.
Yeah, thank you. So when a business corporate goes green, the ultimate is a product or service. That is a green product or service. So my take from here is, what can we do as a country in the next 12 months or going forward to stimulate corporate demand in particular? That's where you can start from. Corporate demand for green products and services. If AGI is saying that it's going to cost additional, it means that there must be some level of demand, effective demand, when that product is ready and on the market. You cannibalize the product if that business is made to compete with mainstream products that are brown products, so to speak, and cost less to create value in those products. And you put someone who has gone through all the mill, done all the good things, but the product is 10 or 15% more expensive. So government must begin directing its effective demand towards green products designed and developed and produced in the country. Business communities, in particular the banks and the AGI members who are transitioning to green production or who are already green, they must demand of their customers or of their suppliers that they also go green. So it is by doing that that we create a chain of demand which rather triggers the requirement for all of us to want to go green. Otherwise, we will be treating the thing at the surface, at the top, because it's nice at the top, but on the ground, the competition on the marketplace is not friendly to a business that decides now to go green. Thank you.
Thank you. Thank you so much. What I'll do is just in summary, discuss what we've heard. What we've heard today is that for implementation to be successful, we require much more than just a roadmap. We require capacity, we require collaboration, we require investments, data, and commitments. I think I have 3 tangible actions for the committee to take forward. Number 1 is a roadmap, a roundtable for financiers. Number 2 is really starting to target high and ESG risk industries and provide support to them to start to de-risk them. And number 3 is stimulating demand for green products, right? How do we start to stimulate the demand for green products? Maybe I'll add a 4th one to that, which was also something that was spoken about here and in the previous panel, which is about the data, right? Starting to collect beyond qualitative data, also the quantitative data that would help us, know how we are doing, benchmark ourselves, and help us to also be ambitious in where we want to get to. So with that, I'll just like to say a very big thank you to my panel. I thoroughly enjoyed this. Thank you for the discussion, and thank you to everyone for your participation. Thank you.
And many thanks to you, the IFC Senior Environmental Specialist, Damilola Sobo-Smith, for such a masterful moderation. How about a group photo together? It's a bunch of hardwares and 1 software. That's ESG for you. And so that wraps it on what stakeholders must do. For me, it's all about consistent and deliberate actions on the part of every stakeholder. Please, one more time, a round of applause. What we've achieved here has been on the back of teamwork, collaboration, and today we're proud to be joined by our supervising governor of the Banking and Supervision Department, where the Climate and Sustainability Office sits. Would you please make welcome for closing remarks, yours and mine, the second deputy governor of our bank, Mrs. Matilda Asante Esiebe.
Thank you, Jerry. Good afternoon. Oh, come on. It's so nice to be back. I was here earlier in the morning, and it's a great delight to see that we all stayed the course. And I was quite intrigued by the conversations that were going on, because really and truly, if we're looking to make a difference and make this roadmap effective, some of the things discussed here are definitely things that we need to work on implementing. So just to make the point that I have taken note of the feedback, what the expectation is of the central bank, but also I think what the expectation is of industry players and the fiscal authorities. So as you know, as the central bank, we have financial challenges ourselves, right? So we cannot directly finance. But thankfully, working together with the groups, we put together a taxonomy document, which we were hoping to get implemented sometime this year. Now that we've launched the roadmap, working with the fiscal authorities, I believe that's something that we can put in force. And what that will do is that it will give the incentives that both the commercial banks expect and also that the corporate entities also expect, so that when we're going green, we know that there's a deliberate action towards achieving that. We've also heard from the Association of Banks on the need to look at the capital charge, for instance. There are also some macroprudential tools and risk-weighted tools that I believe we can also use, again, to incentivize industry to invest in green. So that's something that we're definitely taking note of, and we're going to be working with industry to bring to fruition. Now, as we draw this conversation to a close, please allow me to also reflect on a few other areas of significance, which I believe we've set in motion today. So the launch of this roadmap, as far as we are concerned, is not just a deliberate and structured journey. It is also a journey towards financial sector resilience, inclusiveness, and alignment with the long-term sustainable development goals of our country, Ghana. And I wish to, at this point, reiterate a point that the governor made in the beginning this morning in his remarks, when he said that heads of the regulatory bodies, for availing themselves and their staff and resources, we would need to continue to work to take this forward. And let me say our deepest appreciation, especially to the technical committee members from all the regulatory bodies, to the IFC and to their team, to the Swiss State Secretariat for Economic Affairs for their valuable support in the development and launch of this roadmap. So what's going to happen hereafter? Well, we believe that the weightier matters go beyond this very fine ceremony that we've all had today. At the sectoral level, the Financial Stability Council, which houses all the financial sector regulators, supported by the technical committees, will provide strategic oversights for this roadmap, ensuring that we have alignment with the financial stability objectives of the country and our macro financial developments. In this regard, we expect that each regulatory authority will be required to submit biannual progress reports to this roadmap. We've heard about that roundtable conversation. That is a next step that we must definitely have as well. And then we're also expecting that they will be outlining the actions that have been taken. So whether you are from the Insurance Commission or the Securities and Exchange Commission or the Bank of Ghana or the National Pensions Regulatory Authority that we outline the actions that we have taken, the challenges that we encountered in the execution of the roadmaps, and the priority areas for the next reporting period. Now, on the Sustainable Finance Roadmap, we've also designed it such that it will be implemented in a coordinated, phased, and proportional manner, anchored within our existing financial sector governance and supervisory structures. Again, what that means simply is that the pensions regulator would make sure they are tackling their end. The central bank will make sure we're tackling our end, so that together when we meet at the Financial Stability Council, we're able to take account of what we have all achieved and where the gaps are, so that we can take the necessary actions needed for that. Now, our initial efforts will focus on making sure that the governance arrangements are properly anchored, that we're building supervisory and industry capacity. Again, something that I heard the panel speak about just a few minutes ago. And then issuing foundational guidelines. In the banking sector, I think we're well advanced when it comes to that. But we need to make sure that all the other financial sector regulators are also on board. Now, so to our colleague regulators, the Securities and Exchange Commission, the National Insurance Commission, the National Pensions Regulatory Authority, what we ask of you is very simple, that we move very swiftly to translate this roadmap into specific sector interventions, supervisory guidelines, expectations, and perhaps over and above all that, effective monitoring frameworks that are consistent with our statutory mandates and the peculiarities of our sector. Because even though we're all in the same financial services sector, we have peculiarities. Now, to the financial institutions who are represented here in this room, I believe that this roadmap sets a very clear direction. We know that some of you are well advanced in executing ESG and sustainability in your operations. For those of you who have started, please deepen that. For those of you who are yet to start the process, please start embedding sustainability considerations into your strategy, into your governance, into risk management. We were talking about it this morning, that if you financed a vehicle, if you financed a structure which was washed away by the floods 2 days ago or yesterday, right? And you did not take the necessary precautions, like insurance, for instance, that means that already that loan is due for restructuring and could potentially go bad. And this is something that actually I experienced myself in my previous life. So we financed an automobile company. It was a showroom. And for those of you who know where the showrooms are lined up, you know what happens when it rains. And unfortunately for us, at the time, the institution didn't quite understand and had not taken on board sustainability and ESG. And so the showroom was flooded, and we had to restructure and overstructure and restructure the facility. Fast forward 5 years on, we had adopted sustainable banking principles. And so there was a facility to be granted. And the security turned out to be in that neighborhood. Of course, the ESG team was not going to let you go and give a loan without going to inspect your security. So they went. And they drew our attention that, oh, by the way, your security is no good, so we cannot grant the facility. And the client had to give us an alternate security. I'm sure that with the rains, if we had taken that security, we'll be back to that same conversation. So I think the moral of the story is quite clear to all of us. We need to take this seriously. Whether you're in the financial services sector, you're in insurance, and honestly, my heart bled for that insurance company that gave us the insurance, because they had to cough out a lot of money to pay. So again, it's really critical that we take this sustainable finance roadmap very seriously. And we are available from the central bank as, if you like, coordinators of this initiative. Be assured of our commitment and support in making this a reality. And as I said, we'll revisit the conversation on taxonomy, because that's where the clear incentives can be adduced, so that when again you're signing up, you know that you're working and there are clear benefits to you for financing, whether it is a solar mill or whether it's a windmill or whatever it is green that you're going to be financing. To our development partners, particularly the IFC, whose support has been substantial in this journey, and to all our stakeholders from industry, from academia, from civil society, your continued engagement will be essential to the momentum continuing to build and to foster industry-wide buy-in and the refining of our approach as we go along. I believe that as a country, we have demonstrated time and again the capacity to lead in the financial services sector. And today, we're adding another chapter to this legacy. The Sustainable Finance Roadmap is our collective commitment to a financial sector that not only drives economic growth, but does so in a manner that is environmentally responsible, socially inclusive, and resilient to the risks of our time. Ghana has become a reference point when it comes to financial sector reforms and guidelines. And I believe that the launch of this roadmap further strengthens our resolve to create an enabling environment for investment and to attract green capital. When I was sitting there with the head of banking supervision, one of the things we were talking about when we said, how do we get a good blended financing arrangement? We talked about EcoBank being able to attract green financing. It was possible because EcoBank presented an Africa-wide position, so that it was not just Ghana. So my charge to the Ghana Association of Banks is also to see whether within the sub-region we can pool resources together, because the capital out there is big capital. It's not $1 million, no, it's significant. And they are looking at capital that can be deployed across the region, not just in one country. So GAB, happy to work with you to see how we can, again, collaborating with similar minded entities in the sub-region, how we can attract this kind of green financing so that we can invest it in the real sectors of our economy. Ladies and gentlemen, I want to thank you once again for your time. Let us embrace this journey of creating a sustainable financial services sector. And together, let's reap the benefits which come with having a sustainable economy. I thank you for your time and your commitment today. We don't take it for granted at all. And I want to say a special thank you. Please, let's give a round of applause to our technical committees. And to our sustainable banking team within banking supervision. An amazing job, team. Thank you very much. Enjoy the rest of your day.
Please help me say thank you to our supervising governor, the second deputy governor of the Bank of Ghana, Mrs. Matilda Asante-Asiedu. Thank you very much for that closing and articulating so well the need for sector-specific initiatives to advance this course. It is proper that we say thank you from the Office of Climate and Sustainability to one and all who have helped us to achieve today. Please make welcome my sister, Nanasika Ahiabo.
So, good afternoon, distinguished guests, ladies and gentlemen. I stand on all existing protocols. As the saying goes in French, tout est bien, qui finit bien, meaning all is well that ends well. On behalf of the Governor of the Bank of Ghana, it is my great honor and privilege to deliver the vote of thanks at the successful launch of the Ghana Sustainable Finance Roadmap. under the theme, Achieving Regulatory Convergence on ESG, Promoting a Resilient and Sustainable Future for Ghana. We are grateful to God for making it possible for us to launch this roadmap today, following an extensive period of hard work and dedication by all stakeholders. Today's event has been both insightful and inspiring, bringing together key stakeholders committed to advancing sustainable finance in Ghana. First and foremost, we express our deepest appreciation to the Almighty God for guiding us through this process. Our heartfelt thanks go to the Governor of the Bank of Ghana, Dr. Johnson Pandite Siama, and his two deputies for their visionary leadership in supporting us to develop and launch this roadmap. We are also grateful to you for making time to deliver remarks and participating in a panel discussion during this important launch. Our heartfelt appreciation also goes to our sector minister, Honorable Dr. Keswato Banforson, who was duly represented by his technical advisor for the support and guidance. We are also grateful to you for delivering the keynote address and reaffirming government's strong commitments to sustainable development. Our sincere thanks also goes to the International Finance Corporation, the Sustainable Banking and Finance Network supported by SECO for their unflinching support and dedication in driving the sustainability agenda in Ghana and beyond. The development of the roadmap and today's launch would not have been possible without your substantial support. We wish to especially thank Ms. Natalie Kosi-Akon of IOC for taking time off her busy schedule to be with us today. Thank you, Madam. Our appreciation also goes to Honorable Seydou Isifu, Minister of State, in charge of climate and sustainability, for your goodwill message and continued support for Ghana's sustainability journey. My remarks will not be complete without acknowledging the support of our partners in the financial sector, namely Securities and Exchange Commission, National Insurance Commission, and National Pensions Regulatory Authority for your collaborative efforts with the Bank of Ghana in developing the Sustainable Finance Roadmap. Of course, this was done with the support of CIB and ICAG, and we say thank you. To our indefatigable steering committee members who worked on developing the roadmap, we should be happy that our hard work has culminated in what we see today, our ECO team. We wish to also specially acknowledge and appreciate the presence and contributions of governors of sister central banks across West Africa, notably the Deputy Governor of the Central Bank of Gambia, Dr. Abduli Sire Jallo, for coming to support us on this important journey and the launch of the roadmap. In the same vein, we extend our gratitude to the leadership of key regional institutions, particularly the West African Monetary Agency, WAMA, and the West African Monetary Institute, WAMI, as well as the West African Institute for Financial and Economic Management, YFM, for your continued efforts in promoting monetary and financial integration and for supporting initiatives that strengthen sustainability across the region. Special appreciation goes to all our panelists and facilitators who shared their expertise during the discussions on unlocking green capital and implementing sustainable finance frameworks, as well as the BOG technical team and ISU representatives for your insightful presentations. We also acknowledge and thank the Kenyan Bankers Association for joining us today and sharing what implementation has been for you in integrating sustainability in your financial sector. Congratulations in advance on indicating you're going to be launching your roadmap in November. We look forward to that. We also thank both our local and regional regulators, industry associations, market representatives, and all stakeholders who contributed meaningfully through discussions and reflections on implementation. I especially want to thank Mr. Musta Salah from the African Development Bank for joining us today and moderating the high-level panel discussion. Thank you so much, sir. To our cultural performers, thank you for adding color and vibrancy to today's program. Finally, we express our heartfelt appreciation to all participants for your presence, engagement, and commitment to shaping a sustainable financial future for Ghana. As we conclude, we are reminded that the launch of this roadmap marks not the end, but the beginning of a collective journey. Let us continue to work together to translate these commitments into tangible outcomes. Thank you and have a safe journey back home. God bless us all.
Nana Sika Ahiabo is with the Climate and Sustainability Office of the Banking and Supervision Department. Please help me appreciate her once more. But all that we've done, ladies and gentlemen, has been because one woman has been the wind beneath our wings. She's the head of the Sustainability Office. Would you please help me appreciate Mrs. Oswell Abankwa? Thank you for all the support. And so, as we come to a close, ladies and gentlemen, I'm minded of the fact that our coming together somewhere around 2019, 2020 was just the beginning. Us staying together has been progress, but now we need to work together to achieve success. Let this just be a step, the first step, but let it propel us, let it give us a shot in the arm for us to achieve sustainable banking in Ghana and in Africa. We do so because it is possible. My name is Jerry Ajololo, and I hope to see you all when we begin to count the dividends that would accrue from this living, breathing document which we've launched today. Happily together, ladies and gentlemen, let us rise and gather here for one big family photo, and then we proceed. Let's please proceed to the front for one big family photo, and there I'll make an announcement to you all. As many as can, let me have you on stage as we have our governor together with the leadership of the bank and our representatives from our partners joining us. Please come up, please come up, please come up. Anaska, is there a hashtag? We don't have one yet. GSFR. Achieving sustainability. Ah, okay. So ladies and gentlemen, when I say GFSR, we'll just say achieving sustainability. Are we good? Okay. Okay, so let's take a picture. The first picture will be the LinkedIn picture. And the second one will be the other socials picture. Okay. You've done the LinkedIn one. Now let's do the other one. So when I say GSFR, we say achieving sustainability. Are we ready? So GSFR. GSFR, and for the last time, GSFR. With this, you all qualify for a round of networking and cocktail at the Capitol. It's up the flight of stairs. Let's go there and bond together as one big family. Our ushers are on hand to direct one and all to the Capitol.